Okay. Good morning, champions. So I'm doing the marathon for the students who are writing the cost and management accounting exam in the month of Jan 25. So when you're watching this video, whatever the doubts that you are getting, please mention it in the comment section. Definitely I'll react to that and make use of this video for your examinations. Okay, without wasting the time, let us start with the marathon. So first, let us revise the basics of the cost and management accounting. The first one is cost classification. Let us understand the cost classification. Generally, we are making the cost classification for achieving some purpose. What are the purposes means? Number one, stock valuation and profit calculation. Number two, decision making. And number three, control. When the purpose is stock valuation and profit calculation, classify the cost into expired cost and unexpired cost, manufacturing, administration, selling and distribution cost, product cost and period cost, and then unit cost and job cost. When the purpose is decision making, classify the cost into variable, fixed, semi-variable cost, sunk cost, opportunity cost, marginal cost. When the purpose is control, controllable cost and uncontrollable cost. Now let us understand one by one classification. Firstly, we are starting with the expired cost and unexpired cost. Very simple. What is expired cost means? See, generally, whatever the cost incurred by the company, such cost will be reduced from the sales. But some part of the cost reduced from the current year sales and some part will be reduced from the next year sales. Whatever the cost reduced from the current year sales is called as expired. It got expired cost. Whichever the cost will carry forward to next accounting period is called as the unexpired cost. I hope you are getting what I mean to explain. So whichever the cost reduced from the current period sales, what will reduce? Cost of goods sold. Will reduce the cost of goods sold from the current period sales so that we'll get the gross profit. So cost of goods sold is called as the expired cost. Then what is unexpired cost means? The cost which carry forward to next accounting period in the name of closing stock. So those are the examples for the expired cost and unexpired cost. Reduce from the sales is expired, carry forward to next period is the unexpired. That's all. Next, let us start with one more important classification: manufacturing, administration, selling, and distribution. This classification will be made based on place where we are incurring the expenditure. Classification of manufacturing, administration, selling, and distribution depends on place where we are incurring the expenditure. Generally, the manufacturing company will be having three divisions. That is the place where you manufacture the product. That is the factory. The place where you manufacture the product. That is factory. Next, the place where they control the operations. That is called the office, corporate office. The place where they make the sales. That is called the sales office. So please understand what is manufacturing cost means: expense incurred in the factory. What all the expense incurred in the factory, it will be considered as the manufacturing cost. Or to elaborate that, expense incurred from the purchase of raw material till the primary packing of the finished goods, we are going to consider it as the manufacturing cost. Where will do this activity? In factory. Purchasing raw material converted into finished goods, where will do that? In factory. So expense incurred in the factory is called as the manufacturing cost. Expense incurred at corporate office, that will be called those expenses will be called as the administration cost. Expense incurred to promote the sales, like sales office, advertisements, distribution of samples, all these things comes under the selling cost. And expense incurred to dispatch the goods or distribute the goods will be called as the distribution cost. So this is the classification of cost based on place where we are incurring the expenditure. When it comes to administration overheads, there are two categories in that. Number one, administration overhead related to production and administration overhead general. You need to have the clarity on this. Administration overhead related to production. What is this? Please understand, in the factory, there will be one separate office called the factory office. expense incurred in the factory office will be considered as the administration overhead related to production. Expense incurred in the corporate office, that is called as the administration overhead general. So related to production means factory office cost. Related to general means corporate office cost. I hope you are getting clarity on this. So manufacturing cost means, look at here. In simple terms, expense incurred in factory. One more thing what we need to understand in manufacturing cost is, see, there are n number of expense will be incurred in the factory. 100 different types of hundreds of expense will be incurred. All these expenses has been pooled. All these expenses has been pooled and are classified into three categories. So what is that means? See, manufacturing cost includes into manufacturing cost classified into three categories: material, labor, expenses. Now this material again classified into direct material, indirect material, direct labor, direct expenses, indirect expenses. If you make a total of all the direct items, we call it as prime cost. We call it as prime or direct cost. If you make a total of all the indirect items, we call it as overheads. This overheads again classified into production overheads, administration overheads, selling and distribution overheads. See, this direct cost means, please understand, the cost which can be traced to the final product. The cost which can be economically traced to the final product, all cost elements is called the direct cost. Then what is indirect cost means? The cost which cannot be traced will be called as the indirect cost. Okay, if you look at here the examples for the direct material, the examples for the direct material is wood, we can see it in the furniture, which we can see with our eyes, economically identified in the furniture. Same way, fabric used for the textile products. These are the examples for the direct material, which we can see in the final product. Next, when it comes to direct labor, who are the direct labor means? The workers who are directly engaged in the production, who are directly manufacturing the product, will be called as the direct laborers. Labor in the factory, workers at construction, chef in the canteen. These are the examples for the direct labor. When it comes to canteen, who are the direct labor means? Chef. Who are the indirect labor means? Service providers like supplying the food, collection of bills. All these people comes under the indirect labor in the canteen. Okay, next. When it comes to direct expenses, cost of defective work and royalty. Are you getting the clarity? So royalty paid is one of the direct expenses. Job work charges paid, one of the direct expenses. Molds and patterns, direct expense. So here molds and patterns, royalty paid and job work charges will be considered as the direct expenses. Now the point is, when it comes to fuel and power, when it comes to fuel and power, see, there are cases where we can classify it as the indirect cost also. If they are able to trace to the product, let me take an example, but fuel and mold, fuel and power, let us understand this. Fuel and power, please understand. Let me take an example. By consuming 1 liter diesel, they are able to manufacture 10 products. If this be the case, this is a direct expense, because 1 liter diesel 80 rupees. 1 liter diesel 80 rupees. 1 liter diesel price is 80 rupees. 10 products. 80 divided by 10. Per unit 8 rupees. If they are able to trace like this, then it's a direct expense. But there are cases where power and fuel cost will be indirect. We cannot trace to the product. I'll give the example, best example, bike mileage. When it comes to bike mileage, fuel cost is indirect because the mileage is not common. It will be fluctuating. Sometimes you get the mileage of 40 kilometers. Sometimes you get the mileage of 35 kilometers. It depends upon place where you are driving the bike. If you are driving in the traffic, your mileage is less. When you are driving in the highways, your mileage is more. So in this case, fuel and power and fuel is a indirect expenses. So please understand, in our cost sheet chapter, they consider it as the direct expenses. Whereas in overhead chapter, they consider it as the indirect expenses. So for cost sheet purpose, remember, fuel and power is a direct expense. Job work charges paid, direct expense. Are you getting the point? Okay, and royalty paid is a direct expense. Keep it in mind. Okay, now when it comes to indirect material, the material which cannot be traced to the product, like lubricants. Lubricants cannot be traced to the product. Same way, safety wear by the workers. These two materials cannot be traced to the product. Next, When it comes to indirect labor, who are the indirect labor means the one who is not directly engaged in the production process, like supervisors and foremen, security guard, janitors. All these people are not producing the product, just they're supporting the production activity. So these people comes under the indirect labor. Next, indirect expenses. What is this indirect expenses? See, normally other than material and labor is a expenses. This expense divided into classified into direct expenses and indirect expenses. What is direct expense? I already told you, which can be traced. Other than direct expenses, everything will be recorded as the indirect expenses. Everything will be recorded as the indirect expenses. Okay, as an example I given here, telephone bill, electricity bill, insurance of the machinery and depreciation of the machinery, all these things, factory rent, all these things comes under the indirect expenses. If you pull up all the, if you make a total of all the direct expenses, direct items is called the prime cost or direct cost. If you make a total of all the indirect items, it is called the overheads. Overheads again classified into production overheads, administration overhead, selling and distribution overheads. As I told you, administration overhead two categories: administration overhead related to production, administration overhead general. You are clear on this? Okay. Now let us start with the next classification. Product cost and period cost. Very, very, very important classification. We'll use this classification many places. This classification is based on the stock valuation. Product cost, period cost classification will be made based on the stock valuation. The cost whichever considered for the stock valuation, that is called the product cost. The cost which is not considered for the stock valuation, that is called the period cost. Normally, stock will be valued at manufacturing cost. Stock will be valued at manufacturing cost, not at total cost. We'll consider only manufacturing cost. In financial books as well as in cost books, in both the cases, we'll consider only manufacturing cost. So, simply I can say all manufacturing costs are product cost. All non-manufacturing costs are period cost. Product cost will be debited to trading account. Period cost will be debited to P&L account. And one more important point, product cost will be expired to the extent of goods sold, unexpired to the extent of the closing stock, whereas period cost will expire fully. So this is the classification based on the stock valuation. See, please understand expired cost, unexpired cost. This is the classification based on reduction from sales. Manufacturing, administration, selling and distribution is the classification based on the place where we are incurring the expenditure. Product cost, period cost is the classification based on the stock valuation. Clear? Next, unit cost and job cost. What is this unit cost and job cost? See, first of all, it's not a cost classification. It is the method of valuation of stock. Unit cost and job cost is not this classification of cost. These are the methods to evaluate the stock. Both the methods followed in the manufacturing organizations. When they follow unit costing, when the output is similar, they'll evaluate using unit costing. When the output is dissimilar, they'll evaluate using job costing. I'll give you the best example. Renault company, pen manufacturing company. Renault company will follow the unit costing. And when it comes to job costing, that will be followed by the L&T construction company. Because the construction company will be doing different projects. We cannot follow the unit costing there. So what I mean to say, when we follow unit costing means when the output is similar. When we follow job costing means when the output is dissimilar. When the output is similar, we are going to evaluate the stock on average basis. No need to evaluate each and every product separately because similar products. We are going to evaluate on average basis. When we will follow the job costing, I told you dissimilar. We are going to evaluate the stock on individual basis, independent basis. They'll be given the naming: job A, job B, job C, job D, or job 1, job 2, job 3, job 4. Like that, they'll give the naming. Are you clear? Okay, so that is about the unit cost and job cost. It is for the stock valuation. These are the methods of stock valuation. Software company, they'll follow job costing because they are coming out with, the output will be different. Water bottle manufacturing company, unit costing. Clear? Understanding? Okay, now. Let us start with the next slot, decision making. When the purpose is decision making, we have separate classification. There are chapters which are based on the decision oriented, and there are chapters which are based on the stock valuations. So in the chapters of stock valuations, we'll take the classification of manufacturing, administration, selling and distribution. In the chapters of decision making, we'll take the classification of variable, fixed and semi-variable. Marginal costing will follow the variable and fixed. Are you understanding? And when it comes to the cost sheet, we'll follow the manufacturing, administration, selling, and distribution. Because the purpose of cost sheet is accumulating the cost to evaluate the stock and to calculate the profit. Are you understanding? Now, let us discuss the variable, fixed, and semi-variable cost. What is this means? When it comes to variable cost, you all know that the cost which changes is the variable with along with the production. The cost which changes along with the production is called as the variable. The cost which does not change along with the production is called as the fixed. You need to get one more point here. Please understand variable cost is constant per unit. This you need to understand. What we discussed initially is a total, nature in total. Variable cost in total changes with change in production. Fixed cost in total constant. But variable cost is constant in per unit. Fixed cost changes in total. Sorry, fixed cost changes in per unit. Variable cost is constant per unit, whereas fixed cost changes in per unit. So to understand this better, I'm taking one example. See here, let me take an example. Material cost, which is variable cost, equal to rupees 5, and then fixed cost, which is the factory rent, equals to 12,000. What I'm going to do, I'll take units, variable cost, fixed cost, total cost, variable cost per unit, fixed cost per unit, total cost per unit. Let me take 1,000 units. The company is producing 1,000 units. Variable cost is 5 into 1,000, 5,000. Fixed cost is 12,000. Total cost comes to 17,000. When it comes to variable cost per unit, that is 5 rupees. Fixed cost per unit, 12,000 divided by 1,000, that is 12 rupees. Total cost per unit is 17 rupees. Then let me take 2,000 units. Instead of 1,000, the company is producing 2,000 units. Now the point is 2,000 into 5, 10,000, and then 12,000. Total comes to 22,000. Now variable cost per unit 5 rupees. Fixed cost per unit 12,000 divided by 2,000, 6 rupees, and total cost is 11 rupees. If you observe properly, initially what we discussed is variable cost changes with production in total. Fixed cost is constant in total. Now the thing is we need to understand the per unit nature. When it comes to per unit nature, variable cost is constant, whereas fixed cost changes. Fixed cost per unit decreases with increase in production, increases with decrease in production. Variable cost in total increases with increase in production, decreases with decrease in production. So here what you need to remember is constant nature. You need to remember the constant nature. Fixed cost is constant in total, whereas variable cost is constant in per unit. Because there are cases where we need to check given information is variable or fixed. They'll not give the name. Just they'll give the two volumes and they'll give the amount. Are two different volumes. Let me take an example. They given in the question. They given in the question that 10,000 units and 12,000 units. They given like this, and they mention cost is 1 lakh and the cost is 1 lakh. So by changing the volume, cost is not changing. So it is a fixed cost. They given like this, 1 lakh, 1,20,000. By changing the units, cost is changing. So it's a variable cost. And here, before classifying into variable cost, you need to check per unit. If you calculate here, 1 lakh divided by 10,000, rupees 10. 1,20,000 divided by 12,000, rupees 10. Per unit is same. So that I am classifying it as variable cost. If per unit is not same, total is also not same, then it is semi-variable cost. As the name replicates, semi-variable cost, partially variable cost, partially fixed cost. That is called as semi-variable cost. Whenever they given the semi-variable cost, let me take an example. Units cost 1,000, 2,000. Cost is 17,000. Cost is 22,000. If you observe this, first of all, it is not a fixed cost because total is not same. If you take per unit, 17,000 divided by 1,000, 17. 22,000 divided by 2,000, 11. Per unit is also not same. So it is not a fixed cost. It is not a variable cost. Then what is the semi-variable cost? Whenever they given the semi-variable cost, we should know how to classify into variable cost and fixed cost. How to classify that? Listen. First we'll take variable cost per unit. Variable cost per unit equal to change in cost. Change in cost divided by change in units. In this case, what is the change in cost? 5,000. 17,000 become 22,000. Change in cost is 5,000. 1,000 become 2,000. Change in units is 1,000, which is equal to rupees 5. Now what we'll do, out of these two, you can take anything as a base. Let me take 1,000 as the base. If you take 1,000 as the base, variable cost equal to 1,000 into 5, which equals to 5,000. Next, fixed cost equal to total cost minus variable cost, which equals to 17,000 minus 5,000, which equals to 12,000. This is how we need to classify into variable cost and fixed cost. Suppose if you want to calculate cost for the 5,000 units, if you want to calculate cost for the 5,000 units, total cost for the 5,000 units, how to do that? Total cost equal to variable cost plus fixed cost. Variable cost is 5,000 units into 5 plus fixed cost is 12,000, which equals to 25,000 plus 12,000, which equals to 37,000. This is how we need to classify the cost into variable cost and fixed cost, and then you can calculate the total cost. Are you clear on this? All of you? Okay now. So this is the classification of the variable, fixed and semi-variable cost. Then next one is sunk cost. Very simple and important too. Sunk cost. As the name represents, cost incurred in the past, which is already sunk. Cost incurred in the past, historical cost. Sir, why we consider under decision making? Because sunk cost is irrelevant for the decision making. This you need to remember. Sunk cost is irrelevant for decision making. Whatever the cost incurred in the past, irrelevant. Whenever I say decision, it is about future. If it is future, take the future revenue and take the future cost. Don't consider the past cost. Today date is 21st. 20th of December, whatever the cost incurred. 20th of December, whatever the cost incurred is a sunk cost. Are you understanding? Sunk cost means cost incurred in the past. It is irrelevant. Don't consider for the decision making. Decision making means future. Decision is about future. Take the future revenue and take the future cost. Compare those two and take the decision. That is the way they give sunk cost under the decision making. It is irrelevant for the decision making. Clear? Next one is opportunity cost. Simple. What is opportunity cost? Benefit lost. What is opportunity cost means? Benefit lost by choosing the alternative option. Benefit lost by choosing the alternative option. Once you become CA, there are two options. Either to go for the practice or to go for the employment. If you go for practice, you are expecting 80,000 per month. If you go for employment, you are expecting 1 lakh per month. You will choose to go for employment. That means you are losing the income of practice, which is the opportunity cost. Let me take one more example. There is a person who is starting the business in his own premises. In his own premises, he is starting the business. If he start in his own premises, does he going to pay the rent for himself? No, own premises. Why he pay the rent for himself? So that rent, whatever rent that he is losing from the own premises by starting the own business, that is called the opportunity cost. Rent is the opportunity cost, which is called notional cost. Are you understanding? By starting the business, he is losing the rent. So rent is the opportunity cost. That means benefit loss by choosing the alternative option. In this case, what is the alternative option? He is starting the business to make the income by losing the rental income. So rent loss is the opportunity cost. Clear? Last one, you already know that marginal cost. Additional cost incurred to produce one additional unit is called the marginal cost. Additional cost incurred to produce one additional unit is called the marginal cost. At last, I want to discuss one thing called the one more classification based on control. This is controllable cost and uncontrollable cost. If you ask you the base how to classify this, you will tell, sir, the cost which can be controlled is called controllable cost. The cost which cannot be controlled is called the uncontrollable cost. I'll agree with that, but let us understand the application of this. What is the application of this means? See, please understand. Let me take a factory. To understand this, let me take the factory. In that factory, there are two departments. What are the two departments? One is purchase. One is purchase department. One more thing is production department. Now, purchase department has purchase manager, production department has production manager. Let me take an example, purchase cost. Let me take an example, purchase cost. Purchase cost can be influenced by the purchase manager. Purchase cost can be influenced, controlled by the purchase manager. So for the purchase manager, it is a controllable cost. Production manager cannot involve here. He cannot influence the purchase cost. He is not the person, he is not the right person to decide the purchase cost. So for him, it's an uncontrollable cost. So purchase cost is a controllable cost for the purchase manager, uncontrollable cost for the production manager. Let me take one more example, labor cost. When it comes to labor cost, purchase manager, for him it's an uncontrollable cost. Production manager, for him it's a controllable cost because production manager can control the labor cost. So please understand what is controllable cost means the cost which can be influenced by the decision of the specified person like purchase manager, production manager, planning manager. If the person is able to influence the cost, for him it's a controllable cost. The cost which cannot be influenced by the decision of the specified person, that is called as the uncontrollable cost. Once you enter the factor, then you can decide which is controllable, which is uncontrollable. Practical approach is good for this classification. All of it clear? So this is the controllable and uncontrollable. Okay, so this is the basic understanding which we require to study the subject called as the cost and management accounting. Very important. Okay, without wasting time, let me start with the one of the very important chapter called as the cost sheet. Let me start with the cost sheet. Now let us see the format. Generally in cost sheet, see why we prepare the cost sheet to accumulate the cost. To accumulate different cost elements will be incurred in the factory. All these cost elements we need to accumulate. How to accumulate? That means by preparing the cost sheet. The purpose of preparing the cost sheet is one is to evaluate the stock, and the second purpose is profit calculation. That means stock valuation, profit calculation. If the purpose is stock valuation and profit calculation, classify the cost into manufacturing, administration, selling, and distribution, or expired, unexpired also, based on the requirement. But the cost sheet format is given based on the classification of manufacturing, administration, selling, and distribution. Okay, now when it comes to cost sheet, firstly we'll calculate direct material consumed. How to calculate direct material consumed? First, opening stock of raw material plus purchase of raw material plus carriage inward. In study material, this adjustment is not there. Whenever they given the carriage inward, we need to add it to the purchase cost. It is not there in the study material, but I'm writing. Wherever they given the carriage inward details, add it to the purchase cost. Minus purchase return. It is also not there. Purchase returns to be adjusted to the purchase only. Carriage inward to be added, purchase returns to be reduced. And then reduce the closing stock of raw material, and then reduce scrap income of raw material. Sometimes we'll get the scrap income which become unusable. The raw material which become unusable, we'll sell it in the market at less cost or less price. That will be considered as the scrap income. These 6 adjustments we need to consider while calculating the direct material consumed. To this add direct wages and direct expenses, you will be getting prime cost. We already discussed this. To the prime cost, add production overheads, which is also called as the manufacturing overheads, which is also called as the work overheads, which is also called as the factory overhead. These are the different names: prime cost, manufacturing overhead, production overhead, work overheads, or factory overheads. These are the different names. Okay, after adding this, we'll be getting gross work cost. To the gross work cost, add opening stock of work in progress less closing stock of work in progress. Adjust the work in progress. Please understand, work in progress we're evaluating by adding the manufacturing overheads. Add opening stock of work in progress, reduce closing stock of work in progress. We'll be getting network cost. Gross work cost is also called as the manufacturing cost. Network cost is also called as the factory cost. These are the different names. To the factory cost, add manufacturing related expenses. Sir, what is the manufacturing related expenses? Quality control cost, research and development cost, administration overhead related to production. Very important. To the network cost, add quality control cost. Quality control cost in the sense inspection of the finished goods, inspection cost of the finished goods. Research and development, you know that. And then administration overhead related to production. I already discussed the cost incurred in the factory office. Simply I can write cost incurred in the factory office. Are you understanding? So administration overhead related to production minus scrap income from production process. Scrap income from production process will be called as the will be reduced from this cost, reduced from the network cost. And then add primary packing cost. I'll explain this later. Primary packing cost. By adjusting all these things, you will be getting cost of production. You will be getting cost of production. Are you understanding? Now, once you get the cost of production, add opening stock of finished goods less closing stock of finished goods. You will be getting cost of goods sold. You will be getting cost of goods sold. To this, add administration overhead general, add selling and distribution overhead, add secondary packing cost. Secondary packing cost. You will be getting cost of sales, which is also called as the total cost. You will be getting cost of sales, which is also called as the total cost. And then add profit. You will be getting sales. This is the format of the cost sheet. Okay, let us do one question based on the cost sheet. Now, this is one of the big question in which multiple transactions has been given. So this question helps to revise the entire cost sheet chapter. Listen to me. See here. Let us do the classification first. Arnav Inspat Udyog Limited has the following expenditure for the year ended 31st March 2023. First, they given raw material purchased. This is the purchase cost. You know that this helps to calculate the direct material consumed. Next, GST paid on the above purchase 18%, eligible for input tax credit. If it is eligible for input tax credit, on one hand we are paying it to the supplier, on the other hand we are reducing from the output tax when we are paying the GST. Here, how much they are paying? 1 crore 80 lakh rupees they are paying, and they are getting the benefit by reducing from the output tax. Is it a cost? No. One hand we are paying, and on the other hand we are saving. So it is not a cost. If input tax rate is not available, then it is a cost. Then add it to the purchases. When the input tax rate is not available, suppose there are cases. Suppose if you import the goods, if you import the goods, whatever the GST paid, that will not be allowed as input tax credit. Are you understanding? So when the input tax rate is ineligible for the deduction, then I mean to say custom duty, what a basic custom duty, whatever you paid, that is ineligible for the input tax. So that has to be added to the purchase cost. Clear? Next. You know, in this case, they give it as the eligible. They give it as the eligible. So we are not going to consider it as the cost. Eligible for the deduction. So we are not going to consider it as the cost. Next, freight inward. I told you the carriage inward. Add it to the purchase cost. Wages paid to see all these things are the adjustment of direct material consumed. Next, wages paid to factory workers. Direct wages. Now, direct wages will be added, will be accumulated. All the cost paid to the direct workers, whatever the cost incurred toward direct workers, entire thing will be added as the direct wages. It can be in any name. Look at here. They given direct wages paid. We'll take the direct wages. Next, contribution made towards employee PF and ESI. That will also form part of the direct wages. Production bonus paid, direct wages. So all these three things form part of the direct wages. Next, royalty paid for production, direct expenses. We already discussed. Amount paid for power and fuel, direct expenses. Whereas in overhead chapter, we'll take it as the indirect. Please remember for cost sheet, they're taking it as the direct expenses study material. Let's follow the study material. For cost sheet, they take it as direct expenses. You also take it as direct expenses. Next, amount paid for purchase of molds and pattern. Life is equivalent to 2 years production. So please understand, molds and pattern, it is also direct expenses. But they given here, life is equivalent to 2 years. Total amount paid is 8 lakh 96,000. Total amount incurred is 8 lakh 96,000. Life is 2 years. So divide by 2. You will get 4 lakh 98,000. That is the cost which need to be considered. Next, job charges paid to job workers. This is also direct expenses. Okay. Next, stores and spares consumed. Stores and spares consumed. This is the production overhead. Because stores and spares, indirect material, indirect labor, indirect expenses form part of the overheads. Here, this is the cost incurred in the factory. So that I call it as factory overhead or production overhead or manufacturing overhead or work overhead. Okay. Next, depreciation on factory building, factory overhead. Depreciation on office building, administration overhead. Depreciation on plant and machinery, factory overhead. Depreciation on delivery van, distribution overhead. So it depends on the asset on which we are charging the depreciation. On computers, administration overhead. On the vehicle used by the director, administration overhead. General, administration overhead, general. Okay. Office building, administration overhead, general. Factory building, factory overhead. Plant and machinery, factory overhead. Delivery vehicle, distribution overheads. Clear? Next, salary paid to supervisors. Salary paid to supervisors comes under the factory overhead. Supervisors are the people who are working the work location, Who will supervise the workers? So factory overheads, indirect labor. He is not going to produce the product. He is just controlling the production activity. So indirect labor. Okay, next. Repairs and maintenance paid for plant and machinery. Plant and machinery means factory overhead. Sales office building means selling overheads. Vehicle used by the direct means administration overhead general. Okay, next. Insurance premium paid for plant and machinery, factory overhead, factory building, factory overhead. Store stock of raw material work in progress. It is there at the factory only. So factory overhead related to factory overheads. Okay, next. Expenses paid for quality control check activities, QCC, quality control cost. Salary paid to quality control staff, QCC. Research and development cost, R&D. Research and development cost, R&D. Expenses paid for pollution control and engineering and maintenance. Expenses paid for pollution control and engineering and maintenance. Many people think it is a QCC. It is not a quality control. It is not the quality control of the product. It is the pollution control which is related to factory. It is not related to the inspection team. Inspection team is not going to take care of the pollution. Quality control cost is related to inspection team. Now the point is expenses paid for pollution control and engineering maintenance we're going to take it as the factory overhead, one of the indirect expense. Okay, next expenses paid for administration of factory. Look at here, administration of factory. So admin overhead related to production. Okay, factory office expenses. Salary paid to functional managers, production control manager. Production control manager. He will be working in the factory, but in the factory office. He'll be working in the factory, but in the factory office. He'll be sitting in the factory office. So, admin overhead. Sorry. Admin overhead related to production. Next, salary paid to functional manager, finance and accounts. He'll be sitting in the corporate office. Admin overhead general. Sales and marketing. Selling overheads. This will be classified as the selling overhead. Next, salary paid to general manager, administration overhead general. Next, packing cost paid for primary packing necessary for maintain quality. So let us understand the packing cost. When it comes to packing cost, there are three types. Primary packing, secondary packing, special secondary packing. Primary packing, secondary packing, special secondary packing. What is primary packing? Without such packing, product will not come into existence. Without such packing, product will not come into existence. The best example is gas cylinder. Without cylinder, you cannot carry the gas. Cool drink bottle, toothpaste, the tube of toothpaste. The tube is the primary packing. Boost bottle. So if you go to the DMart, you can see n number of primary packings. All the containers will be called as the primary packing. Either it can be covered or it can be plastic bottles. All the containers will be considered as the primary packing. Okay, next secondary packing. What is secondary? See here it is. I can take all containers. All containers are the primary packing. Next secondary packing. What is secondary packing means? See, secondary packing will be made to distribute the product or to get the attention from the customer. There are two purposes: to redistribute. Why we are making secondary packing means to redistribute or to get attention from customer. These are the two purposes of doing the secondary packing. So redistribute. Let me take an example. Water bottles. Water bottles. Let me take. They'll take 20 water bottles. Again, they'll add the cover to that. That cover packing is the secondary packing. Why they're doing that cover packing? To redistribute. And one more thing, when it comes to the attention of customer, suppose if you take toothpaste, there'll be a tube. In the tube, there'll be a paste. In the tube will be covered with a cardboard box. That cardboard box is a secondary packing. There are two purposes for that. One is to redistribute, and one more thing is to get the attention from the customer. They'll do the colorful packing. Suppose if you take close up, they'll do the red color. They'll use the red color. Suppose if you take Sensodyne, they'll use the white. So just to get the attention from the customer. Suppose if the person goes to the DMart, he want to purchase the close up. He will look for the red color. Based on color, he will identify the product. That is called attention from the customer. Are you understanding? Next, special secondary packing will be made at the request of customer. It will be made at the request of customer. Gift packing. Bubble cover packing for the safety transport, safer transport. These are the examples for the special secondary packing. Are you understanding? Okay. So whenever people go to Goa, they'll bring something from there. So that those bottles will be covered with the bubble covers. So I'm sure. Okay, now. So this is about the packing cost. So now the point is primary packing, secondary packing, special secondary packing. We need to understand the classification. Primary packing will be classified as manufacturing cost because this is the cost incurred in the factory. Secondary, special secondary packing will be classified as selling cost because incurred in the sales office. And the intent is to promote the sales. Packing has been done to promote the sales. Okay, when it comes to secondary packing, this expense will be incurred in the factory, so we'll classify it as manufacturing cost. This expense is incurred in the factory, so we'll classify it as manufacturing cost. Now, but the purpose is redistribution to get the attention from customer. So we're going to classify it as selling and distribution. Promote the sales is one purpose, get nothing but attention of customer. And one more thing, redistribution. That's called distribution cost, selling and distribution. So we can classify in two categories, either in manufacturing cost or selling and distribution. But we'll we will advise, we being a professional, will advise to classify it as the selling and distribution, but not the manufacturing cost. There is a reason for that. If you classify it as manufacturing cost, stock value will increase because stock is valued at manufacturing cost. When the stock value increases, closing stock value also increases. If the closing stock value increases, profit increases, gross profit increases. If the gross profit increases, net profit also increases. If net profit increases, PBT, profit before tax, will payable tax, not taxable profit. I can call it as taxable profit. Taxable profit will increase so that the tax payment also increases. Just because of classifying into manufacturing cost, we are paying some excess tax. We are paying some excess tax. So to avoid this, we are not going to classify it as manufacturing cost. We will classify it as selling and distribution. So please understand in our cost sheet also, whenever they given primary packing, include in the cost of production, nothing but production cost, manufacturing cost. When they given secondary packing, add along with the selling and distribution. When they given the special secondary packing, along with the selling and distribution. Okay, now come back to the question. If you look at this question, primary packing necessary to maintain the quality. Primary packing necessary to maintain the quality. So it will be added to the cost of production. It will be added to the cost of production. Next, for redistribution of finished good. If it is for redistribution, selling and distribution. So when we are adding it to cost of production, we are treating it as manufacturing cost. This we are treating it as the selling and distribution cost. Okay, next, interest and finance charges. See, this one thing, according to me, it should not come in the cost sheet. It should not come in the cost sheet. Interest and finance charges paid. It is the financing activity. In cost books, we can say only operating activities. There are three activities: operating, financing, investing. Financing and investing will not form part of the cost books. Only operating will form part of the cost books. But in study material, it is given and considered at the last, along with the selling and distribution. Okay, they given in the study material. Let's follow by the study material because we need to get the marks. Interest and finance charges, if they given in the question, add along with the selling and distribution. Okay, next, fee paid to auditors. It is the administration overheads. Fee paid to legal advisors, administration overheads. All these people will be working in the administration office. Next, fee paid to independent directors, administration overheads. Performance bonus paid for sales staff, selling overheads. Now, value of stock as on 1st April 2022, nothing but opening stock, and value of stock as on 31st March 2023, closing stock. Clear? So if you put it in the cost sheet format, you will get the values. What they are asking here. Amount realized by selling of scrap waste generated during manufacturing process 86,000. So this is the scrap income. One thing is clear, it is the scrap income. This scrap income to be reduced along with the in the raw material calculation or cost of production calculation means this to be reduced along with the cost of production, quality control cost, R&D cost, administration related to production, and then minus scrap income. That is where we need to reduce this because related to manufacturing process. Next, from the above data, you are required to prepare statement of cost sheet of Arnav Ispat with cost for Arnav Ispat Udyog Limited for the year ended 31st March 2023, showing prime cost, factory cost, cost of production, cost of goods sold, cost of sales. To show all these things, you have to prepare the cost sheet. Simple. Clear? Okay, now let us start with the illustration 2. So these are the one of the important question. The books of Adarsh Manufacturing Company present the following data for the month of April. Direct labor cost 17,500 being 175% of the work overheads. Cost of goods sold excluding administrative expenses 56,000. Inventory accounts showed the following opening and closing balances. Raw material, work in progress, finished goods. They give the opening balance on 1st April, closing balance on 30th April. Please understand this is the monthly cost sheet. Previous question is yearly cost sheet. There is no restriction about the period of cost sheet. You can do it monthly, yearly, quarterly, or semi-annually. And one more thing, we can prepare the cost for the each job. That is called the job cost sheet. We'll discuss in the job cost sheet. We can prepare the cost sheet for the one single job. That is called the job cost sheet. We can prepare it for one unit, which is called a unit cost sheet. Okay. Now, so they give the opening stock and closing stock. Next, other data are selling expenses 3,500, general and administration expenses 2,500, sales for the month 75,000. You are required to find out value of material purchased. Prepare a cost statement showing the various elements of cost and also the profit. And so they are asking to calculate first material purchased. They are asking to calculate first material purchase and then they are asking to prepare the cost statement. Let's do this question. See one more point. Direct labor cost is 17,500 being 175% of the work overheads. This adjustment, this transaction helps to calculate the work overheads or factory overheads. How to calculate that here? Direct labor cost is 17,500. But this is 175% of the work overhead. Means direct labor is 175% of work overheads. Now, can I write work overhead equal to direct labor divided by 175%? So, work overhead equal to 17,500 divided by 175%, which equals to 10,000. Okay, so we know the work overheads. Now, what we need to do, see here, in this case, we need to calculate the direct material purchase. We will start with the cost of goods sold. We will start with the cost of goods sold. To calculate the material purchase, normally what happens, they'll give the purchases, opening stock, closing stock, all these details. Will we keep on adding the values and we'll calculate the cost of goods sold. Now in this question, they given the cost of goods sold, asking to calculate the purchase, so we have to go with the reverse. We have to go reverse. Okay, let's see that. Okay, let me take here only cost of goods sold. How much is that? 56,000. Cost of goods sold is 56,000. When we are going reverse, normally what happens? We'll get cost of production, add opening stock of finished goods, less closing stock of finished goods, we'll get cost of goods sold. Now what we need to do? We need to add closing stock of finished goods less opening stock. When we are going reverse, sign changes, plus will become minus, minus will become plus. So cost of goods sold 56,000 plus closing stock of finished goods. How much is that? 19,000 minus opening stock of finished goods 17,600. So if you adjust these two, we'll get cost of production. So how much is the cost of production is 57,400. Net amount is okay. 57,400 is the cost of production. Normally to the cost of production, see now how we will get the cost of production? Network cost plus QCC, all these things. All those manufacturing related expenses not given in the question. So cost of production is also called as the network cost. Cost of production is also called as the network cost. Now to this, adjust the add closing stock of WAP less opening stock of WAP. Closing stock of WAP 14,500. Opening stock of WAP 10,500. We have to reduce this, add 14,500. Net amount is 4,000, add 4,000 to this. So it will become 61,400. It will become 61,400, which is called as the gross work cost. Add manufacturing overheads. How much is the manufacturing overheads? Just to we calculate 10,000. If you add 10,000 to this, we'll get prime cost 71,400 to from the prime cost. Sorry, I'm sorry. To the gross from the gross work cost. From the gross work cost, reduce manufacturing overheads. That is 10,000. If you reduce that, we'll get prime cost. See, that's what it will. Plus will become minus, minus will become plus. So prime cost is 51,400. Now from the prime cost, reduce direct wages. How much is the direct wages? 17,500. If you reduce that, we'll be getting the purchases. We are going reverse. And then they are asking the cost sheet. And then they are asking the cost sheet. Take the reverse of that. We know the purchases. We can calculate one by one. This question is important because we are doing the reverse calculation. Are you understanding? Okay. So that is about the cost sheet. These are the basis of cost sheet. Okay. Now. Okay. Let us start with the chapter called the material costing. Very, very important from the CA intermediate. Damn sure question will be there in the examination. Okay. Let us discuss the basics of the material costing. Material costing. In this, I want to revise first of all material procurement process. Initially, I need to discuss the material procurement process. Nothing but the process of purchases. Nothing but process of purchases. Generally, what happens? How the purchase process will start? There will be a department called the engineering or planning department. Those people will analyze the market. First, they'll analyze the market and they'll identify what is the demand of the product. Once they identify the demand of the product, based on demand, they're going to decide the production. Based on production, they'll decide what all the raw materials required. What all the raw materials required to produce the product. And they'll make a list of all those raw material and they'll identify what is the quantity required to produce for the production of required production. So engineering department, as I told you, engineer it is there in the study material. Clearly, it is there in the study material. Okay, I'll do one thing. I'll take the picture for you. You'll understand better. Okay, I hope you are able to see. Yeah, see here. First, material procurement control or material procurement process. It starts from the engineering or planning department. What they'll do, as I told you, they'll analyze the demand in the market and based on demand they'll decide the production. For the production, what all the raw materials required, they'll make a list, and what are the quantity required, they'll make the list. So that list is called the bill of material. The name for that is bill of material. That bill of material will be given to the production department or workshop. Based on that bill of material, the production department has to start the production, because in bill of material they'll be mentioning what is the production required and what all the raw materials required. So based on that, the production department has to start with the production. When they want to start with the production, they require the raw material. From where they can get the raw material? From storeroom. So they'll be issuing purchase requisition note or material requisition note. Purchase requisition note or material requisition note. They'll be issuing requesting raw material. By issuing the document, the production department is requesting raw material from the storeroom. If the storeroom has the raw material, immediately the storekeeper will supply the raw material. If the raw material is not available, then he need to purchase. He does not have the authority to purchase. What he will do? He will write the purchase requisition note, PRN. Okay. Purchase requisition note to the purchase department. Based on this purchase requisition note, the purchase department will start purchasing the raw material. What they'll do? First they'll request for the proposal or request for the quotation from the supplier. They can purchase raw material from the supplier. They'll request for the quotations. They'll request for the quotation from the suppliers, or they'll go for the tender process. Then what the supplier will do? Based on this request, he'll give the quotation. After receiving the quotation by the purchase department will be receiving quotation from the multiple suppliers. By taking all these quotations, they will identify. By taking all these quotations, they will identify who is the. They'll identify they'll analyze the suppliers who will supply the best quality at less cost. They'll identify the supplier who will be supplying the best quality at less cost. To him, they'll issue the purchase order. This is the official document issued by the company and legally enforceable. The purchase department will issue the purchase order to the supplier. Based on that purchase order, the supplier has to supply the raw material. But before supplying the raw material, he'll think about the payment. What he'll do? He will approach the account department. See, point number 7. Point number 6 is purchase order. Point number 7, he'll be approaching the account department by issuing the pro forma invoice. The validity of the pro forma invoice is 30 days, which is called an estimation kind of thing. So pro forma invoice will be issued to the account department. Based on that, account department is going to make the payment. They'll release the payment to the supplier. Once he get the payment, finally he'll write the invoice called the tax invoice. Finally, he'll write the invoice called the tax invoice. Now what happened? He received the payment. Now he need to start supplying the goods. Point number 9, receiving the payment. Issuing the invoice, and after that he will be supplying the goods. Goods delivery with challan or an invoice. Now delivered to where? Delivered to the store department. The moment goods receive the store, department, what will happen? They need to unload all the stock. When they are unloading, they'll prepare one document called the goods received note, which will be issued to the account department. Why? Because supplier is telling that 10,000 units has been loaded. When unloading also, it should be 10,000 units. If there is anything missing, to identify that kind of thing, they'll prepare one note called the goods received note. So they'll prepare the goods received note, they'll unload the goods. After unloading, they'll not keep it immediately in the racks, in the storeroom. What they'll do? They'll do the inspection of the raw material. Where the raw material is according to specification, where the quality is good, whatever agreed, that the supplier given according to the agreement, we'll check everything. If there is any damaged goods or quality is not according to the agreement, then we'll return back to the supplier. So we'll prepare one document called the material return note, in which it includes purchase returns. So after doing all these activities, we'll prepare one final abstract called the material abstract. In material abstract, they clearly specify what is the purchase order issued and how many units has been received from the supplier, how many units has been returned. First we'll write the pro forma invoice issued for the how many units has been received, how many units has been returned, and finally how many units are there at the storeroom. Everything will present in the material abstract. Okay, this is the procurement process. Why I'm telling this is because most of the places they use the wording called the purchase requisition note, material requisition note, goods return note, goods received note. You need to understand what is all these things. These are the internal documents for the internal control. I hope you understand now. Material requisition note raised by production department to stores. Purchase requisition note raised by stores to purchase department. Goods received note prepared by the storeroom, issued to the account department. Goods return note prepared by the storeroom, issued to account department and supplier. Are you understanding? Okay, this is the material procurement process. Now, apart from this, one more important concept of the material costing is inventory control. Inventory control. This is the core thing. Of the material costing. Inventory control is the core thing of the material costing. Sir, what is inventory control? Please understand what is inventory control means. We need to maintain the raw material. As well as finished goods. Finished goods to match with the demand. Raw material to meet the production requirement. Okay, when it comes to inventory control, let me take an example. We have to maintain the raw material according to the requirement of the production department and requirement of the market, demand in the market. Now, let me take an example. 1000 kgs is the requirement. So we need to maintain. We need to make the availability. We need to have the availability of the 1000 kgs. Is it possible? Means accurately maintaining is possible. Means 100% not possible. Sometimes you will be having 1200 kgs, sometimes you will be having 800 kgs. Are you understanding? So please understand I am trying to explain what is inventory control. See, the requirement is 1000 kgs, availability should be 1000 kgs. But sometimes there are 1200 kgs, sometimes there are 800 kgs. This is called as the surplus position. This is called as the deficit position. Both are bad to the organization. When there is a surplus position, what is the cost to the organization? Means carrying cost. Carrying cost is the cost. Here 1000 units is required, but we are maintaining 1200 units. 200 kgs has the extra carrying cost. So here the problem, whenever there is a surplus position, the cost is carrying cost. Whenever there is a deficit, requirement is 1000 kgs, but available is only 800 kgs. What happened? Whenever there is a deficit, there will be it may impact the production. Deficit means the goods, I mean, requirement is 1000, but available is only 800 kgs. It will impact the production. When it impacts the production, it will impact the sales. When it impacts the sales, we are going to lose the contribution. It will decrease the sales, so that we are going to lose the contribution. So what is the cost of deficit position? Means contribution lost. Contribution lost on the sales. This is the cost. Both are bad to the organization. So then what we need to do? We need to have certain control system. We need to have certain, that is called inventory control system, which can minimize the deficit position and which can minimize the surplus position, so that we can reduce the cost. So to have this control system in the organization, they are using multiple techniques. In our syllabus, they given 4 techniques. What are the 4 techniques? Means number 1, stock levels. Number 2, stock classification. Number 3, stock ratios. Number 4, stock registers. These are the 4 things what they given in our syllabus. Okay, now first, out of these 4, very important is stock levels. 90% chances to get question from the stock levels. Only 10% chance from the stock classification, stock ratio. That 10% chance I can tell you nowadays, stock classification is not possible. They are not giving the examination. Stock ratios, I can say out of 10%, 7% can be given to stock ratios and 3% can be given to stock registers. You know that stock register means we will be maintaining under FIFO, LIFO, simple average, weighted average. That is the foundation stuff. Here they may give the question based on application oriented. Maybe chance is there. Chance is just 3%. But 90% chance is there for the stock levels. Let us discuss the stock levels in depth. Okay. Now, what is the stock levels means? First, okay, I'll explain to the material only. There are different stock levels. What is the stock level? Look at here. Reorder level. First, reorder stock level. Look at this. When to order. This will indicate when to place the order. Can we place the order after becoming stock 0? Can we place the order after the stock becoming 0? If you are doing that, see, when you place the order, it will take 2 to 3 days time. If the stock becomes 0, if you place the order 2 to 3 days time, there will be no production. Production will get affected. That is not a wise decision to place the order after making stock 0. We need to hold some stock. We need to hold some stock at the time of placing the order. That holding stock is called as the reorder level. Reorder level is the stock which indicate to place the order. That is what they mentioned, when to order. When to order means at the reorder level. Once the stock touches the reorder level, place the order. Reorder quantity. How much to order? Let me take an example. In a year, your requirement is 1,20,000 kgs. Enter 1,20,000 kgs are going to purchase on the day 1. No. In small lots, you are going to purchase. What is the size? What is the size of the order? What is the size of the order? Is called the economic order quantity or economic order size. That is called how much to order. Are you understanding? Next, maximum stock level. What is this maximum stock level? Up to how much to stock? What is the maximum stock that need to hold? Beyond that holding is excess carrying cost. If you are holding more than maximum stock level, what is the problem is excess carrying cost. There is no purpose also. The management will fix these levels. What is maximum stock? What is the maximum stock level means? Up maximum how much to stock? Up to how much to stock? Minimum stock level. At least how much to stock? What is the minimum stock that need to hold? Average stock level. That is called normally how much to stock. That's here. Up to how much to stock? At least how much to stock? Normally how much to kept? Normally stock, normally kept. Kept in the organization. Normally how much to stock? And then danger level. Kept for emergency requirement. So danger, once the stock touches danger level, we are going to use raw material only for the emergency purposes, emergency production. All regular production will get stopped. Once the stock touches danger level, all the regular production will be stopped. Only emergency requirements will be produced. Next, buffer stock or safety stock. Buffer stock or safety stock to mitigate sudden demand. We'll maintain some excess stock as a safety. If there is a sudden demand in the market, to encash that, we are going to maintain some stock. That is called as the safety stock. So we need to understand how to calculate all these levels. Let us understand one by one. Reorder level equal to maximum consumption into maximum lead time. Reorder level equal to maximum consumption into maximum lead time. I'm telling you again, the formulas what I'm going to write. All these formulas are logic based, are not proven, are not derived. These are the logic based. Only formula which is proved is EOQ. EOQ is the only formula which is proved. Remaining all the formulas are logic based. Let us understand the logic behind these formulas. See, now the point is, sir, you're writing maximum consumption to maximum lead time. Why I need to take maximum consumption to maximum lead time? Why not minimum consumption to minimum lead time? Why not average consumption to average lead time? Maybe now we'll get the doubt right. Let us clarify that. Let me take an example. Consumption. Consumption equal to minimum consumption is 4 kgs, maximum consumption is 6 kgs. When it comes to lead time or reorder period, lead time is also called as the reorder period. It is also called as the reorder period. Let me take an example, 4 days to 6 days. Now the point is reorder level. If I calculate based on minimum, minimum consumption, minimum lead time, what will happen? 4 kgs into 4 days, which equals to 16 kgs. Next, if I calculate reorder level based on average, that is 5 kgs into 5 days, which equals to 25 kgs. If I calculate reorder level based on maximum consumption into maximum lead time, 6 kgs into 6 days, which equals to 36 kgs. Now the point is, if I go by the minimum, I'm maintaining 16 kgs. If I go by the minimum, I'm maintaining 16 kgs. What happened? After placing the order, workers started consuming. See, one more thing, consumption 4 to 6 kgs, lead time 4 to 6 days. How to identify this? Please understand, consumption is not similar every day. Consumption will vary. It depends upon the number of workers attended and efficiency of the worker. If there is 100% attendance, 100% attendance and they are working with 100% efficiency means there will be a maximum consumption. Only 60% of the workers has been attended and they are working with the less efficiency means there will be a minimum consumption. So how to get these values? By looking at the past information. If we check with the past records, we'll get to know what is the minimum consumption and what is the maximum consumption in a day. Same way when it comes to lead. And one more thing, see, just best example I can give it like consumption of idlis at home. Are we going to consume the same number of idlis all the time? It depends upon the sambar. If sambar is so good, we'll have 10 idli. If sambar is bad, we'll have only 3 idli. And depends on our mood. If you are in happy mood, you'll eat more. If you are in the sad mode, you'll eat less. So, same way in the factories also, consumption will be varying. We need to take the maximum consumption, minimum consumption to decide the stock levels. And when it comes to lead time also, lead time, what is lead time or reorder period? Time gap between the placing the order and receiving the goods. Time gap between placing the order and receiving the goods. Sometimes they'll deliver in 4 days, sometimes they'll deliver in 6 days. See, when you place the order in the Flipkart, the goods will be delivered in 2 days, 3 days, 5 days. It depends upon the product which you order and depends upon the weather also. If it is too rainy, the delivery will take time. Are you understanding? There will be variance, there will be uncertainty. There will be uncertainty in the lead time as well as there will be uncertainty in the consumption. There will be uncertainty in the consumption. Are you understanding? So based on those factors, we have to decide the consumption. Okay, we have to take the maximum consumption, minimum consumption, and we have to take the maximum lead time and minimum lead time. So now what happened? I taken reorder level by taking 3 factors. Taking the minimum details, taking the average detail, taking the maximum details. When I take the minimum details, I am maintaining 16 kgs. But what happened? After placing the order, the workers started consuming average 5 kgs. What is the average of this? 4 kgs plus 6 kgs divided by 2, 5 kgs. They started consuming 5 kgs. And the lead time what is taken is 4 days. 5 kgs consumed for 4 days. 20 kgs required. But by following the minimum level, how many kgs were maintaining? 16 kgs. Requirement is 20. There is a stock out. The main purpose of this is what? To avoid the stock out. To avoid the stock out and to avoid the excess stock. The main purpose of all the stock levels is to avoid the stock out and to avoid the excess stock. So when they have the average consumption, when they have the average consumption, what is happening? 20 kgs required. But what we are maintaining only 16 kgs. There is a stock out portion of 4 kgs. When you have the reorder level of at average details 5 into 5 25 kgs, but they started consuming maximum 6 kgs. Time taken is 5 days. 6 into 5 30 kgs required, but what we are maintaining is only 25 kgs. There is a stock out of 5 kgs. To avoid the stock out, it is recommended to consider maximum. It is recommended to consider the maximum consumption, maximum lead time. If you maintain maximum consumption, maximum lead time, your total comes to 36 kgs. There will be no chance for the stock out. Do you understand the logic behind why we are taking maximum consumption to maximum lead time? Are you understanding? Okay, so that is the logic behind this. But you remember one thing: reorder level equal to consumption to lead time. But what consumption? Maximum consumption to maximum lead time. Sometimes in the question, they'll not give the maximum minimum. They'll give only consumption lead time or reorder period. Then take multiple of both. Take the product of both. Consumption into lead time. If they give maximum minimum, maximum consumption into maximum lead time. Simply I can tell you what is reorder level means: consumption during reorder period. During that reorder period, whatever the consumption happened, that is the reorder level. Because to avoid the stock out position and to avoid the excess stock. Okay, now then let us start with the economic order quantity. Very, very important. Out of 90%, we can give 60% to this. I told you 90% chances for the stock levels. Out of the 60% chances to get the EOQ. EOQ is very important. Now see here. What is the formula for EOQ? What is EOQ? First of all, economic order quantity. Are you understand? So please understand, total requirement is 3,60,000 kgs. Total requirement is 3,60,000 kgs. Are we going to order enter 3,60,000 kgs? Means no. We have to place the order in less number of quantity. If you get 3,60,000 kgs, where you are going to store? Let me take an example. Monthly once you are placing the order, that means 30,000 kgs you are going to place the order for each time. That is called ordering quantity. Requirement is 3,60,000. But how much you are ordering means 30,000. Once you consume that, then you place the second order. Once you consume that, then you place third order. Are you understanding? So economic order quantity is called how much quantity we are placing the order. How much quantity we are placing the order is the ordering quantity. Economic order quantity means the order quantity which can make the cost least. Sir, what cost? Material cost. Which can make the material cost least. Please understand material cost. Before that, EOQ. What is the formula for EOQ? EOQ equal to root of 2AO divided by C. EOQ equal to root of 2AO divided by C. Let us see how they arrived this formula. What is the logic? What is the logic behind this formula? Let us understand that. Now, here economic order quantity means the order quantity which can make material cost least. This material cost is associated with the 4 types of cost. What are the 4 types of cost means? Purchase cost, ordering cost, carrying cost, and then stock out cost. Purchase cost, ordering cost, carrying cost, stock out cost. What is purchase cost? What is purchase cost means? The amount paid to the supplier. Please understand what is purchase cost means. Whatever the amount paid to the supplier, it includes GST also. Purchase cost, simple, keep it in mind, amount paid to the supplier. Whatever the amount delivered to the whatever the amount paid to the supplier is called as the purchase cost. Then what is ordering cost? Please understand, when you want to place the order, we need to have a separate team in the office. So what is ordering cost means? The cost incurred from the time of placing the order, and receiving the goods. In this entire process, whatever cost incurred is the ordering cost. I can give you the examples. See, there will be a team who is placing the order. I can call it a purchase department. The cost of purchase department is the ordering cost, because those are the people who are working on the purchases. The cost of purchase department is the ordering cost. Apart from that, they place the order and they'll receive the goods. How they receive the goods? Through road. Let me take an example. The goods are coming through roadways. We need to bear the freight charges, and we need to bear the toll gate charges, and we need to bear the insurance during transportation. All these things form part of the ordering cost. Simple, I can tell you, close your eyes. From the time of placing the order, and receiving the goods, in this process, whatever cost incurred, entirely called the ordering cost. Next, carrying cost. What is carrying cost? Once we receive the goods, we have to keep it in the storeroom. We cannot keep it on the road. We have to keep it in the storeroom. Whatever the cost incurred for the purpose of storage of raw material, simply I can tell you storeroom cost. The entire storeroom cost is called carrying cost. I can give the example: storeroom rent, storekeeper salary, electricity bill of the storeroom, insurance of the stock, interest lost. Very, very important. Interest lost on the stock value. When you have the stock, does it? Let me take an example. The company is having the stock worth 100 crores. Does that 100 crores will get any interest benefit? No, we are losing that interest. Instead of having the stock of 100 crores, if you made the FD, you will get the interest. That interest lost, which is the opportunity cost. That interest lost is a carrying cost. One more thing, obsolescence, outdated. When you maintain the stock for long time, long period, it will become outdated. All these costs form part of the carrying cost. At last, stock out cost. What this stock out cost means, please understand. As I told you, if the stock is not available, there is the stock out position, which has the stock out cost, which is the contribution lost. So these all are the cost elements which are related to the material cost. Now the point is, when it comes to EOQ, ordering quantity which can minimize all these costs, because ordering quantity has impact on all these things. Ordering cost will impact the carrying cost. Ordering cost will impact the ordering cost. Ordering cost will ordering quantity. Ordering quantity will impact the ordering cost. Ordering quantity will impact the carrying cost. Ordering quantity will impact the stock out cost as well as purchase cost. Because how it will impact the purchase cost? See, ordering quantity, if you order bulk, you will get some discounts. If you order less quantity, you will not get the discount. One more thing, ordering cost. When it comes to ordering cost, it depends on number of orders. If you order more number of units, number of orders is less. If you order less number of units, number of orders is more. When it comes to carrying cost, if you order more number of units, your carrying cost will be more. If you order less number of units, your carrying cost will be less. Same as stock out cost. Are you understanding? So these are the cost elements which will be associated with the material cost. Sum of all these four cost elements. Sum of all these four cost elements is the material cost. Now let us see, by considering all these four factors, how they derived the formula root of 2a divided by c. They derived based on assumptions. Assumptions plays role here. Very, very important. Sometimes they ask the theoretical question also, assumptions of EOQ. Very important and very simple. Let me take C. EOQ equal to, you know the formula, root of 2a divided by c. First assumption, what they made is quantity is constant. Okay, annual requirement is constant. Annual requirement is constant. Annual requirement is constant. Are you understanding? Next, number 2, no price discounts. No price discounts based on quantity. Based on quantity purchase. No price discount based on quantity purchase. Please understand, first point is annual requirement is constant. Nothing but quantity constant. Second assumption, price is constant. If quantity and price is constant, purchase cost is constant. Quantity into price is the purchase cost. Please understand first two assumptions. First assumption is quantity constant. Second assumption is price is constant. If these two are constant, automatically purchase cost is constant. If purchase cost is constant, no need to consider that. Two assumptions make purchase cost constant. Next, number 3, lead time is 0. Lead time is 0 or reorder period is 0. First of all, tell me, is it possible in the practical life? Can we have the reorder period 0? Reorder period. What is reorder period or lead time? Time gap between the placing the order and receiving the goods. Can it be 0? Highly impossible. If that be the case, the supply should sit in the storeroom. Will it happen? No. So then why we are making this assumption? Without this assumption, we cannot prove that formula. We have to make this assumption. So what is the use of this? Lead time 0, reorder period 0. That means what? When you place the order, immediately receive the goods. When you place the order, within minutes, you'll receive the goods. If that be the case, will there be any stock out? There will be no stock out. Place the order, getting the goods. Whenever you want stock, place the order, get the goods. So stock out position is 0. If the stock out position is 0, then what is the stock out cost? 0. No need to consider this. So this assumption makes stock out cost 0. So no need to consider the stock out cost. So what we need to consider is ordering cost and carrying cost. When you are deciding the ordering quantity, consider only ordering cost and carrying cost. And one more assumption what they made, fourth assumption. What they made is ordering cost per order and carrying cost per unit per annum. Ordering cost per order and carrying cost per unit per annum is known and constant. And please understand the wording properly. Ordering cost per order, carrying cost per unit per annum is constant. I'm not telling you ordering cost is constant, carrying cost is constant. Ordering cost is the total ordering cost, carrying cost is the total carrying cost. Here I'm mentioning the point ordering cost per order, carrying cost per unit per annum is constant. But ordering cost changes, carrying cost changes. Are you understanding? Oh, okay. To understand this better, let us understand first of all what is ordering cost. Ordering cost equal to number of orders into cost per order. Number of orders into cost per order or ordering cost per order. Okay. Now, how to calculate number of orders? A divided by OQ. Annual requirement divided by ordering quantity. Annual requirement is 1,20,000 kgs. Ordering quantity is 10,000. How many orders? 12 orders. 1,20,000 divided by 10,000, 12 orders. So A divided by OQ into cost per order or ordering cost per order. I'm going to take it as O. So A divided by OQ into O is the ordering cost. Next, carrying cost. Carrying cost equal to average stock. Average stock into carrying cost per unit per annum. Average stock into carrying cost per unit per annum. So, how to calculate average stock? Half of OQ. See, please understand, sir, why you are taking average stock. Let us understand this point. X-axis, Y-axis, 0. Now, when I'm placing the order, let me take an example. 10,000 units, I'm placing the order. 10,000 units, I'm placing the order, I receive the goods. Now, slowly what happened? I will consume the units or kgs, it will become 0. Again, I will place the order, it will go to the 10,000. Again, it will become 0. Again, I will place the order, it will go to 10,000. Again, it will become 0. So, what is happening? 10,000 units on the day 1 and 0 units on day 30. So, I have to take the average of this. I cannot take the two extreme positions. I cannot take the maximum. I cannot take the minimum. I have to take the average. So how much stock on an average I'm holding in this example means 5,000 kgs. So my carrying cost should be calculated based on 5,000 kgs. I cannot calculate my carrying cost for 10,000. I cannot calculate carrying cost for 0. On an average, I'm holding 5,000. So I'll take the average stock of 5,000. Are you understanding? All of you. So I'm taking average stock into carrying cost per unit per annum. So half of OQ into C. How to calculate average stocks here? I'm getting 5,000. How am I getting 5,000? Sorry, 10,000 plus 0 divided by 2. Can I write it as half of 10,000? So that I'm taking half of OQ. Carrying cost per unit per annum, I'm denoting with C. Very, very important. Please understand here per unit per annum. They'll try to play with this. In examination, they'll try to play with this. They will give you per unit per month. Do into multiply by 12. They'll give you per unit per month. Multiply by 12. Are you understanding? Be careful. Be careful with the wording. Here the point is carrying cost is average stock into carrying cost per unit per annum. Be careful with the wording. Okay, how to take average stock? Half of OQ. Carrying cost per unit per annum divided with C. Now, in this fourth assumption, what we are making constant is OC. These two are constant. These two are constant. Ultimately, what is going to change is number of orders, average stock. These two are going to change based on the ordering quantity. That is what based on assumptions. 4 assumptions has make everything constant except number of orders and average stock. Are you clear? No. The point is one more point. What you need to understand is at EOQ. At EOQ, the ordering quantity. The ordering quantity at where carrying cost equal to carrying cost equal to ordering cost. And you see the ordering quantity at where carrying cost equal to ordering cost. Such quantity is called as the EOQ. There is a logic for that, but no need to explain that. Let me take that. See, at EOQ, ordering cost equal to carrying cost. Ordering cost equal to carrying cost. What is ordering cost? A divided by EOQ. because I'm taking it EOQs. I'm taking A divided by EOQ into O. What is carrying cost? Half of EOQ into C. If you rearrange these values, divide by 2. If I take this side into 2, 2 into A into O equal to divide by EOQ. If you take this side, it will become into EOQ square into C. What I'll do, I'll write EOQ square equal to 2AO divided by C. EOQ equal to root of 2AO divided by C. So please understand, EOQ is the quantity which can make the material cost least. That is point number 1. Point number 2, at EOQ, ordering cost will be equal to carrying cost. And the formula is root of 2AO divided by C. A stands for annual requirement, O stands for ordering cost per order, C stands for carrying cost per unit per annum. This is the logic behind the EOQ. Are you understanding, all of you? Let me take an example. EOQ you are getting, just I'm taking the example, 12,000 kg. EOQ you are getting 12,000 kg. So this is the units which can make the material cost least. Which can make the material cost least. They'll give you the question, suppose if it is 15,000 kgs, what is the extra cost? If it is 10,000 kgs, what is the extra cost? Both the cases there will be extra cost. People think that from 12,000, if it decreases to 10,000 kgs, they think the cost is going to decrease. Wrong. The best quantity to place the order is 12,000. The best quantity to place the order is 12,000. If you place more than that, less than that, your cost is going to be more. Your cost is going to be more. That is one thing. Number 2. In this case, EOQ is 12,000. Then what is this 15,000 kgs? Means ROQ, reorder quantity. That 15,000 and 10,000 is called the reorder quantity. See, we are the professional advisors. We can advise the management based on our calculations. We did the calculation and we concluded that 12,000 kgs is the best thing to place the order. That is the economic order quantity. We advise the management to place the order of 12,000 kgs. Now the management is telling that when they approach to the supplier, supplier is ready to supply only 15,000 kgs. Supplier is ready to supply 15,000. What the management can do? They know that 12,000 kgs is the best. We are the best advisors. They know that. But they place the order of 15,000 kgs. By placing the order of 15,000 kgs, definitely, there will be some extra cost. The supplier is giving option 15,000, 20,000. The supplier is giving the option of 15,000, 20,000. Which lot you want? You have to think the see. You select the lot. You select the lot which is nearer to the EOQ so that you can minimize the loss. You need to select the lot which is nearer to the EOQ. Are you understanding, all of you? See, whatever the stuff I'm giving now, it may be possible in the objective questions. It may not possible in the practical question. May be possible in the objective questions. When they want to test your level of understanding, this all discussion required. Are you understanding? So select the quantity which is nearer to the EOQ. Clear? Okay. So this is about the EOQ. Next, maximum level equal to formula is reorder level plus reorder quantity minus minimum consumption into minimum lead time. This is the formula. Maximum level equal to reorder level plus reorder quantity minus minimum consumption into minimum lead time. Next, minimum level equal to reorder level minus average consumption into average lead time. Next, average level, we have two formulas, that is minimum level plus maximum level divided by 2. There are two formulas, minimum level plus maximum level divided by 2 or minimum level plus half EOQ. This is one of the stupid formula. There is no logic behind that. This is somewhat logical. Average level equal to minimum level plus half EOQ. See how they taken this. We already discussed that the company has to maintain the minimum stock. The company has to maintain the minimum stock. Let me take an example. Minimum stock is 100 kgs. Minimum stock is 100 kgs. Now, the company will be keep placing the orders. Let me take an example. They place in the order of 10,000 kgs. Now, what happened? When they place the order of 10,000 kgs, they'll receive 10,000 kgs. By the time they receive the 10,000 kgs, minimum stock available is 100. It will become, okay, let me take 1,000. Let me take it as 1,000 kgs. I place the order of 10,000 kgs. Placing the order of 10,000 kgs. We already have the stock of 1,000. 1,000 plus 10,000. Total level is 11,000 kgs. Sorry, 11,000 kgs. What happened? We'll start consuming. Slowly we'll start consuming. It become 0. Again we'll place the order. It will go to 11,000. Not 0. It comes to 1,000. It comes to 1,000. Again we'll place the order. It will go to 11,000. Again we're consuming. It will become 0. So not 0. I'm sorry. 1,000. Again place the order. It will go to 11,000. Again it consumed, it will become 1000. It is the fluctuation happening. Now tell me, the fluctuation is happening with 11,000 kgs, 10,000 kgs, 10,000 kgs. Out of 11,000 kgs, 1000 kgs is minimum level. It will be there all the time. It will be there all the time in the company. The fluctuation is happening with the 10,000. So we need to take the half of 10,000. We need to take the half of 10,000 plus minimum level. So that we are writing minimum level plus half of EOQ, half of economic order quantity, or half of ROQ. It depends on, see, the formula is, the formula is minimum level plus half of ROQ. The formula is minimum level plus half of ROQ. If EOQ equal to ROQ, here also we can take EOQ. If it is not equal, we have to go with ROQ. So how it will be? See, please understand, as I told you, we recommended 12,000. They placed the order of 12,000. Then EOQ equal to ROQ. We recommended 12,000, but they placed the order of 15,000. Then EOQ is 12,000, whereas ROQ is 15,000. The formula is half of ROQ. What we are ordering, that is important. Clear? Next. There is one more thing called as the danger level. Danger level equal to average consumption into emergency lead time. Average consumption into emergency lead time. So what is this danger level? Please understand, below the minimum level, there is one level called as the danger level. Once the stock touches danger level, they stop all the regular production. The management will stop all the regular production. They will produce only emergency requirements which need to be delivered to the customers. Okay, how to calculate that? Means average consumption to emergency lead time. If average consumption is not available, then take the minimum consumption. If average consumption is not available, then take the minimum consumption. That is called a danger level. At last, safety stock or buffer stock equal to annual demand divided by 365 days. We'll get annual consumption, not demand, annual consumption. Raw material, na? Annual consumption divided by 365 days into maximum lead time minus average lead time. Maximum lead time minus average lead time. Please understand, safety stock equal to annual consumption divided by 365 days. We'll get consumption per day. Consumption per day into maximum lead time minus average lead time. These are the formulas to calculate the stock levels. Shall we start doing questions based on this? Okay. Now, so okay, let us revise fast. Reorder level, maximum consumption into maximum lead time. Economic order quantity, root of 2AO divided by C. Here we need to remember two more formulas: ordering cost and carrying cost. Ordering cost equal to number of orders into ordering cost per order. That is A divided by EOQ into O. Carrying cost equal to average stock into carrying cost per unit per annum. How to calculate average stock? Half of OQ or half of EOQ into C. Wherever these two are equal, we will get the economic order quantity. And the cost is least at the economic order quantity. When I say material cost, it is sum of four elements: purchase cost, ordering cost, carrying cost, stock out cost. Purchase cost, amount paid to the supplier. Ordering cost incurred from the placement of order receiving the goods. And carrying cost incurred for the storage of the stock. Stock out cost, contribution loss because of the stock out position. If you make total of all these things, we'll count as the purchase cost. When deciding the EOQ, we can say what the ordering cost and carrying cost based on the assumptions. First doesn't make quantity constant. Second doesn't make price constant. Third doesn't make stock out cost zero. Fourth doesn't make order cost per order, carrying cost per unit per annum constant. So ultimately, what is changing? Number of orders and average stock. Okay, that is about the EOQ. Then we discuss the maximum level. What is the maximum level from the reorder level plus reorder quantity minus average, minimum consumption to minimum lead time. Then what is the formula for minimum level? Reorder level minus average consumption to average lead time. What is the average level formula? Two formulas: maximum level plus minimum level divided by 2. One more formula: minimum level plus half EOQ. Then danger level, average consumption into emergency lead time. Safety stock, consumption per day into maximum lead time minus average lead time. So these are the formulas to calculate the stock levels. Let us start doing the questions based on this. Look at here. Illustration 1. Compute EOQ, economic order quantity, and total variable cost for the following. See, please understand. Compute EOQ and total variable cost for the following. What do you mean by variable cost? What is the cost changing? Only ordering cost and carrying cost are changing. Purchase cost is constant, stock out cost is zero. Purchase cost is constant, stock out cost is zero. So they are asking to calculate only ordering cost and carrying cost. Are you understanding? Okay, now. Annual demand 5,000 units, nothing but A. Unit price 20. Ordering cost nothing but 16 rupees. Storage rate, interest rate, obsolescence rate. All these three factors are related to the carrying cost. All these three factors are related to the carrying cost. They given per annum. In terms of percentage, how much it is? 2 plus 12, 14, 14 plus 6, 20% per annum. This will be applied on per unit. This will be applied on per unit. Please remember, storage cost percentage will always apply on the purchase price. Purchase price of the raw material. Now 20 into 20%, which equal to 4 rupees per unit per annum. We know the C, we know the O, we know the A. We can calculate EOQ. EOQ equal to root of 2A divided by C. Substitute the values, you'll get the answer. Okay, next. Determine total cost. See, they are asking not total cost. Here they are asking only variable. Oh, sorry. I'm sorry. Okay, this is the EOQ. Ordering cost equal to A divided by EOQ into O. We know O, we know A, we know EOQ. Just now we calculated. Substitute this. Carrying cost equal to half of EOQ. Because in this case they didn't give an ROQ. So that we are taking EOQ. We are assuming that EOQ equal to ROQ. Half of EOQ into C. We're done with this. We're done with the first requirement. Look at the second requirement. Determine the total cost that would result for the items if a new price of 12.80 is used. They are asking total cost. When I say total cost, we need to add purchase cost plus ordering cost plus carrying cost. See, stock out details is not given. So stock out cost will not be there. When they are asking you to calculate total cost, take purchase cost, ordering cost, carrying cost with the new price of 12.80. When the price changes, see from 20 rupees, the price changes to 12.80. Will the EOQ changes? Answer is yes. So in this case, again we need to calculate EOQ and then calculate purchase cost, ordering cost, carrying cost. How to calculate purchase cost? Quantity into price. What is the quantity they are planning to purchase? 5,000 units. So 5,000 units into 12.80 will get purchase cost. Then calculate EOQ and then calculate ordering cost and carrying cost. All of you clear about this? Okay, now look at the question number 2, illustration 2. G Limited produces a product. G Limited produces a product. Okay. G Limited produces a product which has a monthly demand of 4,000 units. Be careful. They are given the monthly demand. But what we need to take is annual requirement. So 4,000 units given. So 4,000 units into 12, 48,000 units. Okay, next. The product requires a component X which is purchased at 20 rupees. That is the purchase price. For every finished product, 1 unit of component is required. The ordering cost is 120 per order and holding cost is 10% per annum. You are required to calculate economic order quantity. If the minimum lot size to be supplied is 4,000 units, what is the extra cost the company has to incur? What is the minimum carrying cost the company has to incur? Listen. One of the important point what we need to understand is these 2 points. No. Here the point is first produces a product. Produces the product. That means they are specifying the finished goods. They are mentioning the information about the produces the product. Production is related to finished goods. The details is related to finished goods. They are producing 4,000 units per month. Per annum, how many units they will produce? 48,000 units of finished goods they will produce. But EOQ is related to raw material. Please be careful. Here what they given is finished goods, but EOQ is related to raw material. This point makes sense. For every finished product, 1 unit of component is required. For every finished good, 1 component is required. Component is the raw material. So 48,000 units into 1 component will get 48,000 components. Requirement is 48,000 components per annum. Suppose if they given 2 components here, if they given 2 components, we would have taken 48,000 into 2. Luckily, they given 1 unit. So no need to worry. If they given 2 units, we have to take 48,000 into 2, 96,000. Please be careful. Tomorrow in the examination, they may give you 2 units. At the time, you have to take 48,000 into 2 to get the raw material. Here, the units are the finished good, components are the raw material. Okay, luckily, they given 1 unit. Luckily, they given 1 unit, so no need to worry. So, to calculate EOQ, we require A equal to 48,000 components. Components are the raw material. 48,000 components. O equal to how much they given? 120. C equal to 10% per annum. We have to apply on the purchase price. 20 into 10%, 2 rupees. So, AOC. Calculate the EOQ. Root of 2AO divided by C. Next. If the minimum lot size to be supplied is 4,000 units, what is the extra cost? I told you now. If you calculate here, root of 2 into 48,000 into 120 divided by 2. Let me calculate this. 2 into 48,000 into 120 divided by 2 equal to, I'm sorry, okay, 2 into 48,000 into 120 divided by 2 equal to, this is the value, square root. In my calculus, square root is not there. Okay, square root, you can calculate the EOQ. 57,60,000. It is not there in my mobile calculator also. Okay, fine. You can calculate this. You will get the EOQ. Okay, just example. Just example. I'm taking EOQ equal to 2000. I don't know the exact units. 2000 units. So 2000 units is the EOQ. That is the best quantity to place the order. But what they given is 4000 units. But what they given is 4000 units. So there will be some extra cost. How to calculate that? Calculate EOQ. Taking 2000, calculate the total cost. Taking 4000, calculate the total cost. What is total cost? Purchase cost, ordering cost, carrying cost. Purchase cost, ordering cost, carrying cost. Don't take stock out cost. Stock out cost details is not given in any, in your syllabus it is not there. In your syllabus it is not there. So no need to worry about the stock out cost. Whenever they say total cost, purchase cost, ordering cost, carrying cost. Okay. So take difference between these two. There will be some extra cost. Difference is the extra cost. Okay. Next. The next point is, what is the minimum carrying cost? They are asking to calculate carrying cost. Carrying cost is half of EOQ into C. See, at EOQ only there will be minimum cost. There are 4,000 and one more thing is EOQ. The minimum cost can be possible only at EOQ. So half of EOQ into C. That is the answer for the third requirement. Clear? Next. Next. Illustration 3. From the details given below, calculate reorder level, maximum level, minimum level, danger level. First reorder level, maximum consumption into maximum lead time or maximum reorder period. Maximum level, reorder level plus reorder quantity minus minimum consumption into minimum lead time. Minimum level, reorder level minus average consumption into average lead time. Danger level, average consumption into emergency lead time. These are the formulas. Next, reorder quantity is to be calculated on the basis of following information. So this is the information which helps to calculate reorder quantity, which is also called as EOQ in this case, because both are equal we are going to take. Okay, now because the only thing which can help, this information helps only you can calculate by using EOQ, root of 2EO divided by C. What they given? Cost of placing a purchase order, 4,000. Number of units to be purchased during the year. Number of units to be purchased, directly they given purchases in a year. So it is A. Annual requirement. Purchase price per unit inclusive of transport. This is something confused by the students. Please understand, purchase price per unit inclusive of transporting of 50. 50 rupees is the amount paid to the supplier. 50 rupees is the amount paid to the supplier. It includes transportation cost also. That means he is delivering the goods. He himself delivering the goods. So we are going to take it as purchase cost only. Don't take it as ordering cost. It is a purchase cost. Amount paid to the supplier. Whatever amount paid to the supplier is a purchase cost. Take it as purchase cost or purchase price. Don't confuse by the wording transportation cost. Okay, next. Annual cost of storage per unit is 10 rupees, which is nothing but carrying cost. 10 rupees per unit per annum. Listen. Look at the wording. See here they given annual cost of storage per unit is 10 rupees. See, per unit per annum 10 rupees. That is the meaning of this. So see, we know A, we know O, we know C. We can calculate EOQ. Okay, next. Here they given lead time. Average lead time is 10 days, maximum lead time is 15 days, minimum lead time is 5 days, and emergency lead time is 4 days. Emergency lead time helps to calculate the danger level. Next, rate of consumption. Average consumption is 1500 units per day, maximum consumption is 2000 units per day. Then what is the minimum consumption? 1000 units. So use this information and calculate the stock levels. Just substitute the values, you will get the stock levels. Clear? Understanding? So this is about the illustration 3. Illustration 4. This is also based on the stock levels only. Listen. A company uses 3 raw materials A, B and C for a particular product for which the following data apply. They given three types of raw materials A, B, C. Okay. Usage per unit of product. See, this is very important. Usage per unit of product kgs for the production of per unit. For the production of per unit, A require 10 kgs, B require 4 kgs, C require 6 kgs. For the production of per unit of output, per unit of finished good, 1 unit per unit means 1 unit of finished good. 1 unit of finished good require 10 kgs of A, 4 kgs of B, 6 kgs of C. Next, reorder quantity, nothing but ROQ. This is the reorder quantity. Price per kg P. Delivery period in weeks. This is the lead time or reorder period. Minimum, average, maximum. This is the reorder level. Minimum level. Ah, okay. Minimum level. They given question mark, but 2000 given for the C. So what they given? They given raw material required per unit, reorder quantity of ABC, price, delivery period, reorder level, minimum level for C. These are the details given. Look at here. This weekly production varies from 175 to 225 units, average 200 units for the same product. Compute the following quantity. Please be careful. This is very, very important. Very, very important. What the wording that they use? Weekly production means finished goods. Weekly production means finished goods. This 175, 225, 200 are the finished goods. But stock levels were calculated for the raw material. Where in the material costing chapter? Where in the material costing chapter? We are doing it for the raw material. I understand what they give is finished goods. Now, first requirement is uh, minimum stock level of A. When it comes to minimum stock level, reorder level minus average consumption into average lead time. The point is reorder level. How to calculate reorder level? Okay, A reorder level. Maximum consumption into maximum lead time or delivery period. Maximum consumption into maximum lead time or reorder period or delivery time. Now the point is maximum consumption. How to calculate maximum consumption? Look at here. Maximum production is 225 units. Maximum production is 225 units into consumption per unit is 10. 225 into 10 kgs. 225 into 10 kgs. 2250 kgs is the maximum consumption. Many people what they'll do, they'll take 225 units as the maximum consumption. That is not maximum consumption, that is the maximum production. What we need to take is maximum consumption. How to calculate maximum consumption? 225 units into 10 kgs will get 2250 kgs is the maximum consumption. And what is the maximum lead time? 3 weeks. So into 3 weeks. It is a weekly production. So weekly production, weeks. Both are in weeks. We can multiply directly. So 2250 kgs is the maximum consumption per week into how many weeks? 3 weeks. You will be getting 6750 kgs. So not 6750. 3 weeks, no? Okay. 6750 kgs is the reorder level. So only important point is converting finished goods into raw material. Converting finished goods into raw material. Okay. So reorder level is 6750 kgs minus average consumption. How to take average consumption? Average production is 200. 200 into 10,000. Sorry, 200 into 10. 2000 kgs. Into average lead time is 2 days. So 6750 kgs minus 4000 kgs, which equals to 2750 kgs is the minimum stock level. So the importance of this question is converting these finished goods into raw material. Suppose if you want to calculate B, minimum consumption of B. So minimum production 175 into 4. Maximum consumption of B 225 into 4. Average consumption of B 200 into 4. Same way C. Same way when it comes to C. Maximum consumption is 225 into 6. Minimum consumption is 175 into 6. Average consumption is 200 into 6. So that is the important point of this question. Are you understanding what I'm explaining? All of you, okay? Now, okay. Listen. Next concept. See, this is about the stock levels. What all the important from the examination point of view, all those things have been covered. Okay. Now let us understand the stock ratios. Stock ratios. They'll always ask you to calculate inventory turnover ratio. They are asked to calculate inventory turnover ratio. How to calculate this? Means, see, first of all, what is inventory turnover ratio? Means number of times the product is getting rotated. Here we are doing it for the raw material. Number of times the raw material has been replaced. How it will get replaced? We'll purchase the raw material, we'll keep it in the storeroom. We'll keep it in the storeroom and we'll issue for the consumption. Sorry, we'll issue for the production. So purchase issued, purchase issued, purchase issued. How many times it gets done? How many times it get rotated? Or how many times the stock get replaced is called as the inventory turnover ratio. Inventory turnover ratio is measured how many times the raw material has been replaced. If more number of times replaced, what does it mean? It is a fast moving, very fast moving. More number of times replaced means fast moving. Less number of times replaced means slow moving. This is the ratio which helps to decide which is the fast moving goods and which is the slow moving raw material. Okay, what is the formula for this? Annual consumption divided by average stock. Annual consumption divided by average stock. How to calculate consumption? Consumption equal to opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock will get consumption. Are understanding? How to take average stock? Opening stock plus closing stock divided by 2. Using these formulas, we will calculate the inventory turnover ratio. Let me take an example. Raw material A and raw material B. Raw material A is getting 10 times. Raw material B is getting 6 times. Which is fast moving means A. More number of times replaced. Which is slow moving means B. Less number of times replaced. Are you understanding? Fast moving, slow moving. So I can give you the best example. See, this ratios helps to decide strategic location of the product, placement of the products. If you go to the DMart, the moment you enter into the DMart, you will find all the biscuits, chocolates, groceries. All this is at the daily usage, which is fast moving. When it comes to home appliances, it will be there in the third floor. It is not daily usage. Slow moving. Fast moving products will be kept in front of the shop. Slow moving products will be kept somewhere in the shop. So this helps to decide the strategic location of the products. Where to place the products? Is it at the front and back? Daily usage or regular usage or fast moving products will be kept at front. Slow moving will be kept at end. Clear? So ultimately the formula is inventory turnover ratio equal to annual consumption divided by average stock. Consumption is opening stock plus purchase minus closing stock. Average stock is opening stock plus closing stock divided by 2. Okay, let us do one question based on this. Question number 5. From the following details for the year ended 31st March 2023, calculate inventory turnover ratio. They are asking to calculate inventory turnover ratio of 2 items and put forward your comment. What is the comment? Fast moving, slow moving. That is the comment. So inventory turnover ratio, annual consumption divided by average stock. AC divided by AS. Annual consumption divided by average stock. How to calculate consumption? Opening stock plus purchases minus closing stock. 10,000 plus 52, 62,000 minus 6,000, 56,000. 56,000. Next, 9,000 plus 27,000, 36,000. 36,000 minus 11,000, 25,000. Okay, so this is the consumption. Average stock. This is the annual consumption. Average stock. 6,000 plus 10,000 divided by 2. 16,000 divided by 2, 8,000. 11,000 plus 9,000 divided by 2, 10,000. This is 2.5. This is 2.5 times. Whereas 56,000 divided by 8,000. 7 times. Okay, sorry. This is 7 times. So A is 7 times, B is 2.5 times, which is fast moving. A, B is slow moving. That is the answer for this question. Sometimes may be possible for the objective questions. 2 marks for 3 marks. Okay, now. Next. Question number 5. Before going to the question number 5, we need to understand stock raw material valuation. We need to understand the raw material valuation. See, as I told you, mainly possible is 4. Stock levels, stock classification, stock ratios, and stock ledgers. As I told you, stock levels, we discussed that. Stock ratios, just now we discussed. Stock classification, which is called ABC analysis. The given raw material will classify into 3 categories. Raw material, category A, category B, category C, which is not asked in the examination, but let us have the understanding of that. The fear what I'm having is objective questions. They can ask you any question. So stock classification means category A, category B, category C. So how they categorize? Based on the value and quantity. Stock classification. Stock classification. What is the stock classification? See here. What is the stock classification? They classify the stock into A category, B category, C category. How they categorize? Based on the value and based on the quantity. When it comes to A category, value is 70%, quantity is 10%. So valuable product. It is so valuable product. When it comes to category C, value is 10%, quantity is 70%. Quantity is huge, but value is only 10%. Okay. B, in between those two, 20%, 20%. If you take value, A is 70%, B is 20%, C is 10%. If you take quantity, A is 10%, whereas B is 20%, C is 70%. So this is the standard percentages to decide the A category, B category, C category. Are they going to follow the same kind of percentage in the practical life? Absolutely no. There will be some variance. The management will decide which raw material to be considered as A and which raw material to be considered as B and which raw material to be considered as C. It depends upon the management. Accordingly, the policy, classification policy, what the management did, accordingly we need to do the classification. So that is about the stock classification, which is called as ABC analysis. Generally, they will be calling it as ABC analysis. Clear? Next, apart from this, there is one more thing called as the stock registers. I no need to explain this. You already masters in this. Stock register: FIFO, LIFO, simple weighted average. FIFO, first in, first out. LIFO, last in, first out. Simple average method. Simple average method will take the average of only prices, whereas weighted average method will take the average of quantity and price. So these are the four methods. These are the four things under the inventory control. This is the core content. 80% of the chapter covered by this. Balance 20% here and there theory concept. Out of that, one of the concept is valuation. Material valuation. There is a chance to get question from this also. There is a chance to get question from this also. Material valuation. Let us see that. Material valuation is nothing but how to calculate the material. We'll be taking direct material purchases while preparing the cost sheet, opening stock of raw material, purchase of raw material. How they get that value? How they get that value? Not only that, material cost, what is the overall cost? See, material cost, I already told you, sum of four elements. What are the four elements? Purchase cost, ordering cost, carrying cost, stock out cost. We need to add these four. That is nothing but material valuation. If you add these four cost elements, that is nothing but material valuation. What is the cost? Amount paid to the supplier and ordering cost and carrying cost. If you make total of everything, that is called a material cost. Clear? Now look at this. Valuation of material. This is everything there in the study material. It is everything there at study material. Okay. Valuation of material, particular. First, purchase price. We taken that. That is what I told you. Purchase price, that's the amount paid to supplier. What all to be added? Insurance charges, commission or brokerage, freight, inward, and cost of containers. Now, insurance charges. During the transportation, we'll be making insurance payment, and when you are keeping at the storeroom, then also you'll make the insurance. That is the insurance charges. Commission or brokerage. When you purchase the raw material, we are not able to find the supplier directly sometimes. In such case, we'll go through the broker. When you go through the broker, we need to pay some commission to them. That is the commission or brokerage. Next, freight inward, carriage inward. Next, cost of containers. Let us understand this point. See, what is this cost of container means? There are two types of containers: returnable container, non-returnable containers. When they supply the raw material, they will supply the raw material in the containers which need to be returned. There are some containers which is not to be returned. Cardboard boxes. Are we going to return that? No. When they supply the cool drink, glass cool drink bottles in the trays, such trays has to be returned. Now the point is how much to be considered as the cost. Now the point is how much to be considered as the cost. Please understand, they supplied the raw material in the containers. When they supply raw material in the containers, they charge me for the raw material as well as for the containers. Let me take an example. The raw material value is 1 lakh rupees. The cost of containers is 10,000. Totally, they'll collect 1 lakh 10,000 from me. 1 lakh for the raw material, 10,000 for the containers. Totally taken 1 lakh 10,000. I received the raw material. I consumed the raw material. I returned the containers. Total 10,000 paid to me. Paid back to me. Now tell me, in this scenario, how much is the raw material cost, or how much is the cost of containers? Raw material cost is 1 lakh. There is no change in that. How much is the cost of containers? Zero. Initially I paid 10,000. By returning the container, they release my full payment. 10,000 paid and returned back. Now cost of container is zero. Scenario 2. I paid 10,000. I returned the containers. They paid me 8,000. I paid 10,000 initially. When I returned back, they paid me only 8,000. How much is my cost of container? 2,000. Difference between the paid money, received money. 2,000 rupees is the cost of containers. Clear? Now, one more thing. I purchased the raw material. They charged me extra. They charged extra for the containers, which is the cardboard boxes. Generally, fruits, all these things, generally fruits will be transported through cardboard boxes. For cardboard boxes, they charge some extra packing cost, container cost. When I return the, first of all, are we going to return the cardboard boxes? No. Whatever the money charged is the container cost. Let me take an example. Raw material cost is 1 lakh. Per container, they are charging me 3,000 rupees. The 3,000 rupees is the cost of containers. Have you understand this? Everything clearly given. Look at here. One by, okay, I'll come back to that. Next. Wages due to normal reasons. Wastage due to normal reasons. Next, duties and taxes for which no credit or refund is available. So, I told you already, if the input tax credit is available, it is not a cost. If the input tax credit is not available, it is a cost. Next, what are allowed to be reduced? Discount, rebate, subsidy, duties and taxes for which credit or refund is available. If credit is available, reduce it. It is not our cost. Next, penalties and charges, other expenses. So, to understand this better, here I given in detail. First, discount and subsidy. First of all, tell me, discount what we received. Is it our cost? In the sense, see, I am purchasing the goods worth 1 lakh rupees. They given me the discount of 10,000. So how much is my purchase cost? 90,000. It is allowable. It is to be deducted. When it comes to discount, there are 3 types of discounts: trade discount, cash discount, quantity discount. So let us understand this. Trade discount. What is the purpose of giving trade discount? To promote the sales. What is the purpose of giving cash discount? For getting early payment. What is the purpose of giving quantity discount? When they purchase the bulk quantity, we'll give some discount. Here the point is, cash discount is not a allowable expenditure. Cash discount is not related to purchases. It is related to collection of money. So what is to be deducted? What is to be deducted from the purchase cost is trade discount and quantity discount. Whereas cash discount is not deducted. Why? Because cash discount is a financial term, which we'll discuss in the financial management. Cash discount is not related to purchases. Are you understanding? So it is not allowable. Next, subsidy grant received from the government. Generally, what happened when the company started in the special economic zone? Special economic zone says the government is going to give some subsidies. The subsidy will be reduced. That will be deducted. So out of all these four, which is not a allowable discount means cash discount. Remaining all everything will be deducted from the purchase cost. Just I'm telling you adjustments of the material cost valuation. What is to be deducted, what is not to be deducted. Only one item which is not deducted is cash discount. Clear? Next. Duties and taxes. Very simple. Tax, when it comes to tax, if the input tax credit is available, it is not a cost. If the ITC is not available, it is a cost. When it comes to toll gate charges, ITC will not be there. Toll gate charges, ITC will not be there. It is to be included. ITC will not be there. ITC, input tax credit, is not possible. So it is our cost. We are paying, so we will book it as cost. When it comes to IGST, CGST, SGST, or IGST, SGST, CGST, ITC will be available for major purchases. If ITC available, we paid the money to the supplier and we are deducting from the output tax. Paid, deducted. So it is not a cost. Paid but not deducted. That means ITC is not available. It is a cost. Look at here. It is excluded. When it is excluded, if credit is available. If credit of the same is available. Same thing, it is excluded if the credit of same is available. It is excluded if the credit of same is available. ITC available. ITC not available, it is a cost. Okay, next. Basic custom duty, it is added because ITC is not available. Road tax, basic custom duty, ITCs are not available. So we need to add it to the purchase cost. Are you understanding? Okay, now. Penalties will not be considered. See, it is not included. It is not a purchase cost. It is abnormal item. Directly transferred to P&L. It will not form part of the material cost. We cannot collect it from the customers. We cannot add it to the product valuation. So please understand, demoralization, detention penalty, all these things are the management drawbacks, management failures. Management has to bear this. So we'll transfer all these three things into P&L. We will not consider for the stock valuation or material cost valuation. Are you understanding? Next. Insurance, it will be added. It is a cost. It will be added. Commission added. Freight added. All these things are related to purchase only. Cost of container, just now I explained you. Not returnable container added. Returnable container difference. If, see, look at the wording. Not returnable containers, it is a cost. We are not going to return, so we will consider as cost only. Returnable containers, if on return, containers of cost, the returned back, cost of containers is returned back, then in this case, cost of containers is not added with the cost of purchase. See, if it is returned and we are getting back the money, we are not going to consider the purchase. Next, if the amount of refund on returning the containers is less than, refund is less than amount paid, or received is less than payment, then difference is the cost of container. Then difference is the cost of container. All of it clear? Next. This is very important. Shortage, nothing but loss. Shortage, nothing but loss. See, please understand, we need to understand one thing called the difference between cost and loss. Is there any difference? Means absolutely there is a difference. Cost means incurring the money, getting the benefit. Loss means incurring the money, not getting benefit. You are spending your time of 15 hours to watch this marathon. You are spending the time of 15 hours to watch this marathon. By spending the time, if you are getting benefit out of this, that is a cost. Spending 15 hours time, not getting benefit is a loss. But I'm telling you, I'm giving you value addition to you. No need to worry about that. I'm going to give you the value addition to you. So what you're doing is a cost. What the spending time is, what the spending time of you is a cost. If you're not getting any benefit, it is a loss. Are you understanding? If you're not getting any benefit, it's a loss. Clear? Now, when it comes to loss, there are two types: normal loss, abnormal loss. Simple terms. In simple term, normal loss is expected loss. We are expected, we know that loss is going to happen and we are not able to avoid, which is called unavoidable. We know that loss is going to happen and we are not able to avoid that. The best example is evaporation of petrol. We know that loss is happening when they're filling the petrol into the tank. There is some evaporation. We know that loss is happening. Can we do anything? No. Such kind of loss is called normal loss. Expected, we know that, and unavoidable. We cannot do anything. Abnormal, unexpected, unexpectedly happen, and which is avoidable. It can be avoided. Okay, now when it comes to normal loss, we are going to collect it from the customer. We are going to charge it to the customer. So we are going to treat it as the product cost. For stock valuation, we are going to consider this. What is the adjustment means? The normal loss cost will be adjusted to good units with the help of formula. There is a formula for that. Cost per unit equal to total cost minus normal loss scrap income divided by total units minus normal loss units. Using this formula, we are adjusting to the good units. When it comes to unexpected, abnormal loss will be transferred to P&L. This is the treatment of the normal loss and abnormal loss. What is normal loss? Expected. What is abnormal loss? Unexpected. Normal loss is unavoidable and abnormal loss is avoidable. What is the treatment of normal loss? Cost of normal loss will be adjusted to good units. What is the treatment of abnormal loss? Transferred to P&L. Are you understanding? Okay, now. So that is about that. So these are the topics. Based on that, we have one question. Just we'll do it that. See here. Question number 5. This is also important. Maybe asked in the examination. Look at here. An invoice in respect of consignment of chemical A and chemical B provide the following information. Chemical A 10,000 kgs, chemical B 8,000 kgs, they given price 10 rupees, 13 rupees, value given 1 lakh, 4,000. Basic customs duty 10%, credit is not allowed 20,400, railway freight 3,840. Basic custom duty credit is not allowed, so ITC is not available, so it is our cost, we need to bear that. Next, total cost comes to 2,28,240. Now, a shortage of 500 kgs in chemical A and 320 kgs in chemical B is noticed due to normal breakages. Okay, this is the loss identified. This is the loss identified due to normal breakages. Nothing but normal loss. Nothing but normal loss. Now, you are required to compute rate per kg. You are required to compute rate per kg of each chemical, assuming a provision of 2% for further deterioration. Let us understand this point. Listen. See, first of all, let me take only chemical A. For understanding, let me take chemical A. Let me analyze the kgs. How many kgs we ordered? 10,000 kgs. We ordered 10,000 kgs. during the transportation only, they notice 500 kgs has been the shortage. 500 kgs is the shortage. So 10,000 minus 500 kgs, what we received is 9,500 kgs. What we received is 9,500 kgs. Are you understanding? Now, what happened after that? Assuming a provision of 2% for further deterioration. When we create the provision, when we are expecting some loss is going to happen in the future. When we create the provision, when we expect some loss is going to happen in the future, for that we create the provision. That we expected. So 2% loss is expected, which is a normal again. This 2% has to be calculated on received goods. After receiving only, we are estimating 9,500 kgs received, or 9,500 kgs are chemicals. Okay, kgs. 9,500 kgs received, and the 2% is the loss expected. So, what is the expected loss? 190. 9,500 into 2%, 190. If you reduce that 9,310 kgs, 9,310 kgs is the effective units received. Are you understanding? So, they are asking rate per kg. Rate per kg equal to total cost minus normal loss scrap income divided by total units minus normal loss units. So which equals to, I'll come back to total cost. Total unit 10,000. My normal loss units is 500 plus 190, 690. Now total cost. When it comes to total cost, listen. First we need to consider the purchase cost. How much is the purchase cost of A? 1 lakh. How much is the purchase cost of A? 1 lakh. Basic custom duty 10%. 10% of that is 10,000 custom duty. Apart from that, railway freight 3,840. 3,840 we need to apportion in the proportion of 10,000 and 8,000. That is 5 is to 4. If you do that, we'll get railway freight charges. If you make total of these three, we'll get the total cost. Minus, had they given any scrap income, nothing has been stated. So scrap income will be taken as 0. So total cost minus normal loss scrap income is 0 divided by, okay, total cost divided by 9,310 kgs will get cost per kg or rate per kg. Or understand, same way we will calculate for B. This is what the valuation of the material. Are you understanding? So this is about material costing. As I told you, overview. When I told you material, don't think many things are there. As I told you, very simple. It's very simple. It's all about inventory control. There are 4 categories in that: stock registers, stock classification, stock level, stock ratios, and stock levels, stock classification, stock ratios, stock registers. These are the 4 which we need to study. Apart from that, material valuation. This is the only thing with the material. Very simple topic. I hope you get the overview. Okay. Now let us start with labor cost. Okay. Let us start with the employee cost or labor cost. When it comes to this chapter, mainly we are going to discuss 4 topics. Number 1, basis to calculate wages. Number 2, idle time and overtime. Number 3, labor turnover ratios. Number 4, employee cost valuation. These are the 4 concepts which we are going to discuss in this chapter from the exam point of view. Firstly, let us start with the basis to calculate the wages. Let us start with basis to calculate the wages. Please understand, there are only 2 bases. Number 1, time basis. Number 2, piece basis. When it comes to time basis, again there are 2: straight time basis and incentive schemes. Straight time basis formula is hours worked into hourly rate or time taken into time rate. Hours worked into hourly rate or time taken into time rate. Incentive schemes. There are 2 schemes: Rowan scheme and Halsey scheme, which you already know about this. Please understand, straight time basis means there will be no incentive in that, there is no bonus in that. When it comes to incentive schemes, there will be some bonus will be paid to the efficient workers or more efficient workers. Based on their efficiency, we are going to make the payment of the bonus. When it comes to row one, he given the formula total earnings of worker under row one scheme. The worker who has opted for the row one scheme. The formula is basic wages plus bonus. When it comes to basic wages, he given the formula, same formula, time taken into time rate plus bonus. Time saved divided by time allowed into time taken into time rate. Time taken. Time taken into time rate. So please understand, you need to remember mainly the bonus formula. The bonus formula given by the row one, time saved divided by time allowed. He took the proportion of the time saved to time allowed into time taken into time rate. When it comes to Halsey, he given the formula total earnings equal to time taken into time rate plus, this is the basic wages, plus bonus 50% of time saved into time rate. Straight away he given 50% of the time saved to the worker. So these are the formulas to calculate the earnings under row one scheme and Halsey scheme. When it comes to piece basis, that is units produced into piece rate. Units produced into piece rate. Okay, so piece basis means unit produced into piece rate. These are the basis to calculate the wages. Please understand, when it comes to this concept, basis to make the payment of wages, very simple. You have to remember only these formulas. But the only problem is when you're reading the question, identifying the information is very important. Whenever the question is based on, please remember, whenever the question is based on row one and Halsey, you need to calculate first time allowed, time taken, time rate. Sorry, time allowed, time taken, time saved. These three factors are very important. First, you need to identify these three. If you identify two, we can calculate third one. If you identify time allowed, time taken, you can calculate time saved. If you identify time allowed, time saved, we can calculate time taken. So when the question is based on row one or Halsey scheme, you need to identify first time allowed, time taken, time saved. Once you identify this, anyhow, you need to identify the time rate, hourly rate, time rate or hourly rate. If you identify these factors, these four factors, comfortably you can solve the question. The moment you look at the question and you identify that it is based on row one and Halsey, you look for these factors. Clear? Understanding? Okay. So let us do some questions based on this. Look at this question. Mr. A is working by employing 10 skilled workers. Mr. A is the person, he is giving job to the 10 skilled workers. He is considering the introduction of some incentive schemes, either Halsey scheme with 50% bonus or row one scheme of wage payment for increasing the employee productivity to cope with the increased demand for the product by 25%. He feels that if the proposed incentive scheme could bring about an average 20% increase over the present earnings of the workers, it could act as sufficient incentive for them to produce more, and he has accordingly given his assurance to the workers. So what is happening? Mr. A is the person who is employing 10 skilled workers. Now he is planning to consider either row one scheme or Halsey scheme. Why he is thinking about that? Because there is a sudden demand in the market. In the market, the demand of the product increased by 25%. When the demand increases, his production also to be increased. So what he is doing with the existing workers only, he is planning to pay some 20% incentive. For that purpose only, he is choosing for the incentive schemes. He is thinking that, he is imagining that if I am able to compensate the existing workers by 20% incentive, they are able to give me the production increase by 25%. Whenever the Mr. A gives the incentive to the workers, definitely the efficiency of the workers increases. When the efficiency increases, production increases. So he is thinking that if I give 20% hike to them, they are able to give me the production of 25%. That is what his imagination. That is what the question first paragraph is about. Look at the second paragraph. As a result of the assurance, the increase in productivity has been observed as revealed by the following figures for the current month. So, based on assurance, he given the assurance. To the workers that he is going to increase the earnings by 25%. He is going to increase the. He assured that 20% increase will happen to the present earnings. He assured that. Based on that assurance, what the workers did, productivity has been increased. So those details has been given. What are the details given? Hourly rate of wages 40 rupees. This is the hourly rate or time rate. Average time of producing one piece. Average time of producing one piece by one worker at the previous performance is 2 hours. For every one piece, it required 2 hours. That is at the previous performance before introducing the incentive schemes. This is the performance before introducing the incentive schemes. They mentioned that this may be taken as the time allowed. So for every one unit, what is the time allowed? Or for every one piece, what is the time allowed? 2 hours. And this is the actual performance before introduction of the incentive scheme. Two things are there. Before introduction of incentive scheme, one piece required 2 hours. After introduction of incentive schemes, we can take it as time allowed, time permitted. Okay, 2 hours for every one piece. Remember. Next, number of working days in a month, 25 days. Number of working hours per day for each worker. Each worker can work for 8 hours. Actual production during the month, 1050 units. Actual production during the month, 1050 units. As I told you, this question is based on row 1 and Halsey. Unit identified, time allowed, time taken, time saved. So see here, actual production during the month, monthly production given. How many units? 1250. What is the time allowed per piece? 2 hours. 1250 into 2 hours, which equals to 2500 is the time allowed. Are you understanding? What is the time taken? 25 workers are working for 8 hours into, 25 days. How many workers are working? 10 workers. For how many days? 25 days. For how many hours in a day? 8 hours. So which equal to 25 into 10, 250, 250 into 8, 2000. This is the time taken. So what is the time saved? What is the time rate? 40. That's it. We're done with all the facts. If you are able to identify these facts, the question will become very simple. Look at this. What they're asking: calculate effective rate of earnings. Rate of earnings per hour under Halsey and Rowan scheme. Rate of earnings per hour. So under Halsey scheme, we know how to calculate total earnings. Under Rowan scheme, we know how to calculate total earnings. Total earnings divided by, they're asking rate of earnings per hour divided by hours. Total earnings divided by hours. We'll get rate of earnings per hour. What is the formula under Halsey scheme for total earnings? Time taken into time rate plus 50% of time saved into time rate. Time taken 2000, time rate 40 plus 50% of time saved into 40 time rate. 2000 into 40, it comes to 80,000. It comes to 80,000 plus this is 250 into 40, 10,000. Totally comes to 90,000. They are not asking total earnings. They are asking total earnings per hour. So 90,000 divided by hours worked. Here we have to take hours worked. Per hour means we need to take hours worked. Total earnings per hour by the worker. Worker is working for 2000 hours. Don't take time allowed. Divide by hours worked. How many hours worked? 2000 hours. 3 zeros get cancelled. That's equal to 45 rupees per hour. This is the answer. Same way we can calculate the row 1. Are you clear about this question? Okay. Now, it's very simple. As I told you, identify the time allowed, time taken, time saved, time rate. If you identify these 4 factors, it's very simple questions. Okay, next. Look at the Roman number 2. Illustration 2. Okay, before discussing this, let us understand ideal time. Ideal time and overtime. First of all, what is ideal time? What is ideal time? Time during this time. No production. During this time, no production, but payment will be made. During this time, no production, but the payment will be made. That is called the ideal time. When it comes to ideal time, there are 2 types of ideal times: normal ideal time and then abnormal ideal time. Normal ideal time and then abnormal ideal time. What is normal ideal time? What is abnormal time? As usual, normal means expected. You know that ideal time will be there, but unavoidable. Abnormal, unexpected, can be avoided. Okay, let us see some of the examples of normal ideal time. What is the example for normal ideal time? Is time lost between factory gate to work location. First one is time lost between factory gate to work location. So please understand The moment the worker enters into the factory, there will be a punching machine. The moment he punches, the work time starts. From the factory gate to reach the work location, it may take 15 minutes time. There will be a distance of 2 kilometers or 3 kilometers. It will take 15 minutes time to go through internal transportation. Factories internal transportation. So the time lost is a, we know that there will be ideal time. That is an ideal time. But can we avoid that? No. Next, time lost between time lost when changing the job. When changing the job. They are working a job 149. Now they are shifting to the job 153. They are doing the job 149. They are shifting the job to 153. When they are changing the job, see 149 get completed means to remove the entire finished goods, it will take some time. And to make the machine ready, it will take some time. That is the time lost. During that time, will there be any production? No. Can we save that? Can we avoid that? No. Time lost in changing the job. Waiting the job is different. Please understand. Changing the job, waiting the job. These two things. Changing the job, we cannot avoid that. Waiting the job. What do you mean by waiting the job? One job get completed, but no work allocation. No work allocation from the manager. Production manager didn't allocate the work. I am waiting for the job. It is an avoidable. It is an avoidable abnormal. Changing the job is normal. We cannot avoid that. We have to remove the finished goods, cleaning up of the machinery, making machine ready for the next batch. All these things are the time lost during changing the job. Waiting the job means I done with everything, but no work allocation from the production manager. That is an abnormal. Okay, next. Lunch break. Lunch break, resting time. All these things comes under the normal ideal time, which cannot be avoided. All these things. Okay, now abnormal ideal time. When it comes to abnormal ideal time, the first point is machine breakdown. Machine breakdown. Second point is power failure. Power failure. Third point is floods, fire, accident. Accident happened in the factory. All these things are abnormal. Can you avoid? Yes. Are you understanding? No. Now the treatment. Ideal time. Normal ideal time cost. Normal ideal time cost adjusted to good hours. In case of material, adjusted to good units. In case of labor hours, adjusted to good hours. Accounted to good hours. So how to happen that? See, when there is a normal ideal time hourly rate equal to total labor cost divided by total hours minus normal ideal time. There will be no scrap income. Abnormal ideal time transfer to P&L. Understanding? Okay. So this is about the ideal time. Let us do the question based on this. Look at this. Illustration 2. In a factory, 6 days in a week and 8 hours each day, a worker is paid at the rate of 100 rupees per day basic plus DA plus DA at the rate of 120% of basic. 100 into 120%, 120 rupees. Basic is 100, DA is 120. Hourly rate is, per day na? Daily rate. Daily wages 220. Daily wages 220. Now, he is allowed to take 30 minutes off during his hour shift for meals break, 10 minutes recess for rest. So, permitted to take 30 minutes for the lunch and 10 minutes for the resting time. Is it normal or abnormal? Normal. Okay, now, during a week, this is the weekly information. What they given is weekly information. His card showed that his time was chargeable too. Generally, workers will maintain the time sheet. In that time sheet, they need to mention from which time to which time and which job they are working. Starting time, ending time for the job A. Starting time and ending time for the job B. Starting time and ending time for the job C. Like that, they'll maintain the time sheet. According to the time sheet, on job X, he is working for 15 hours. The given worker is working for 15 hours. Job Y, he is working for 12 hours. Job Z, he is working for 13 hours. Total comes to, this is 25, 40 hours. Total comes to 40 hours. Now the point is, how many hours we paid? We paid for how many hours? He is working 6 days in a week and 8 hours in a day. He is going to get the payment for the 6 days. He is going to get the payment for the 6 days for how many hours? 8 hours. Are you understanding? Okay. So 6 days into 8 hours. Totally time taken. Okay. Let me write like hours paid. or time paid. Hours paid equal to 48 hours. Hours paid equal to 48 hours. He is going to get the payment how much? 220 per day. These are daily, per day basis. Per day basis 220 for 6 days. He is going to get the payment for 6 days. 6 into 220, which comes to 1320 rupees. 1320 rupees is the total earnings. For how many hours? 48 hours. But how many hours he worked? 40 hours. So please understand, this is hours worked. This is hours paid. This is the total earnings what he is getting. Okay, now what they are asking, the time not booked was wasted while waiting for the job. It is waiting for the job, not changing job. Waiting abnormal. Waiting abnormal. Okay. In cost accounting, state how would you allocate the wages of the worker for the week. They're asking how we are going to allocate. We need to allocate to job A, we need to allocate to job X, job Y, job Z, and there is some normal ideal time and there is some abnormal ideal time. So we need to allocate this 1320 rupees to the five things: job X, job Y, job Z, normal ideal time, abnormal ideal time. But normal ideal time, we are not going to allocate the cost. Normal ideal time cost will be adjusted to good hours. So what we need to do now? We need to calculate the hourly rate first. How to calculate hourly rate? Total labor cost divided by total hours minus normal ideal time, which equals to total labor cost 1320 divided by total hours is 48 hours. Normal ideal time is 4 hours. How I am getting 4? 30 minutes is for the lunch. 10 minutes is for the resting time. 40 minutes in a day. How many days? 6 days. 40 into 6. 240 minutes. 240 minutes, 30 minutes, 10 minutes, 40 minutes into 6 days, 240 minutes, divide by 60 minutes, you will get 4 hours. 4 hours is the normal ideal time. Waiting time is abnormal. Balance, what is the, see, 40 hours working out of 48. Listen. Out of 48, 40 are working hours. 40 are working hours. 4 are normal ideal time. What is the balance? 4 hours, that is abnormal ideal time. Understanding? So now what we need to do? Here 1320 divided by total hours 48, normal end time 4. How much you will get to? 1320 divided by 44. 1320 divided by 44. How much is 30? You will get 30 rupees. Hourly rate is 30. Now what we will do? Job X. If you take job X, how many hours worked? 15 hours. So 15 into 30. 450 rupees allocated to job X. Same way job Y. How many hours? Same way job Y. How many hours? 12 hours. So 12 into 30. 360. Job Z. How many hours? 13. 13 into 30, which equals to 390. We need to allocate for the abnormal ideal time. Abnormal ideal time 4 hours. 4 into 30, which equals to 120. 1320 is the total. So everything has been accounted. To the job X 450, job Y 360, job Z 390. For the P and L, anyhow, abnormal ideal time will go to P and L 120. This is a we need to account. I hope you understand the ideal time and adjustment of the ideal time. Clear? Next, let us start with the overtime. Let us start with the overtime. What is overtime? The working time beyond normal working hours. Beyond normal working hours. Generally, the company will set the timing 10 a.m. to 6 p.m. These are the normal timings. If they started working before 10, after 6. If they started working before 10, after 6, everything will be considered as overtime. In a week, the days in which they work is Monday to Friday. In a week, they'll work from Monday to Friday. If they're working on Saturday and Sunday, that is also overtime. Please understand, first you need to understand what is overtime. Overtime is working beyond normal working hours. The normal working timings is 10 to 6 in a day, Monday to Friday. Apart from this, if they're working at any time, everything is called overtime. This is overtime, number one. Number two, if the company does not have this kind of policy, working time policy, then we have to go by the Factories Act. We have to go by the Factories Act. We have to go by the Factories Act. What the Factories Act said, they given two things: daily condition, weekly condition. Daily greater than 9 hours. Daily is greater than 9 hours is the overtime. Weekly is greater than 48 hours is the overtime. Are you understanding? So based on this, we can decide the what is the overtime. Once you decide the overtime, let me take an example. Mr. A is the worker working for. Let me take an example. 40. Okay. Working for 60 hours. Working for 60 hours in a week. Working for 60 hours in a week. According to the classification, normal time, overtime. Normal time is 48 hours. Overtime is 12 hours. Just I'm taking the example. Normal time is 48. 48 hours in a week is permitted. That is the sorry. 48 hours in a week is the normal time. Beyond 48 hours is 12 hours work. That is the overtime. Now tell me one thing. When they are working for normal time, hourly rate is normal hourly rate. Let me take an example. 100 rupees. When they're working for overtime, do you think they'll work for 100 rupees? They'll expect something extra. That extra is called the premium, overtime premium. Normally it will be double. Normally, according to Factories Act, normally it will be double. So for overtime, we need to pay 200 rupees. So for normal time, we'll pay 100 rupees. For overtime, we'll pay 200 rupees. Please understand this 200 rupees is called as the overtime hourly rate. The name for that is overtime hourly rate. That overtime hourly rate includes two things: basic wage rate or normal hourly rate. Normal hourly rate. Normal hourly rate, overtime premium, OTP, overtime premium. Normal hourly rate is 100 rupees, overtime premium is 100 rupees per hour. Now the discussion is, please understand, the discussion is how to account the overtime premium. These two things. Now, see, if you account at normal hourly rate, labor cost. If you account at normal hourly rate, labor cost. Even the overtime of 12 hours, even the overtime of 12 hours, look at here, 12 into 100, 1200, it will be accounted as labor cost only. The point is 12 into 100 overtime premium, 1200. How to account this? Overtime premium. This is called as overtime premium. Per hour is 100 rupees total. In this case is 1200. How to account that 1200? That is what the discussion. So overtime premium accounting depends on reason why there is a overtime. According to our syllabus, overtime premium accounting. Overtime premium accounting. According to our syllabus, there are four reasons. There are four reasons for the overtime. The first reason is at the request of customer. At the request of customer. Second one is regular feature. Regular feature due to labor shortage. Due to labor shortage. Third reason, abnormal reasons. Abnormal reasons. Fourth reasons, due to seasonal demand. Due to seasonal demand or urgencies and exigencies. Okay. Now, what overtime premium accounting? We are discussing the. See, I told you na. Normal hourly rate will always account at labor cost. Now the discussion is overtime premium. How to account that? Depends on the reason at the request of customer. If it is at the request of customer, add it to respect to job. Add it to respect to job. Add it to respect to job. Let me take an example. There is a company called the XYZ Limited. Now the company is getting one job from the Mr. Z. Mr. Z is asking to produce the job number job 129. Now what happened? Mr. Z, when the Mr. Z approaches the company XYZ Limited said, we require 30 days. We require 30 days to deliver the job. But Mr. Z is requiring, please deliver in 20 days. Then definitely the XYZ Limited has to work for overtime. The XYZ Limited workers has to work for overtime. Now what the XYZ Limited will do? The XYZ Limited management will call for the union president of the labor. Then they will discuss with the union leader. After discussing, if the union leader accepted for working overtime, then they will promise the Mr. Z. Now in this case, workers are working for overtime because of Mr. Z. Now overtime premium, whatever paid by the company, this premium should be added to the job number 129. That has to be collected from the customer called as Mr. Z. Because of him only the company is working overtime. The company workers are working overtime. So please understand, add it to respect to job. That is the accounting treatment. In this case, respect to job is job 129. Clear. Next, regular feature. As a regular feature due to labor shortage, there are certain work locations where workers are not comfortable to work. All the time there will be labor shortage. How much ever they pay, there will be labor shortage. Especially, I can give you the example: batteries production, coal mines. In all these work locations, workers will not adjust. They will not feel comfortable. So there will be a labor shortage. In this case, what we need to do? Revise the labor hour rate. Anyhow, it is happening regular basis. Anyhow, it is happening regularly. That is revise the labor rate only. Are you understanding? That is revise the labor rate only. Clear? Next, abnormal reasons. We know that P&L. It will transfer to the P&L account. If overtime is working for abnormal reasons, how it will happen? I'll give the example. Machine breakdown happen. Let me take XYZ Limited. One of the customer, Mr. N, approached the company. Company said like we'll deliver in 10 days. He said okay for that. But after accepting the order, machine get breakdown. The machine breakdown happened. 3 days lost. 3 days lost because of machine breakdown. Promised to deliver in 10 days. Out of 10 days, 3 days gone. Within 7 days, they have to deliver. Is there any force from the Mr. N? No. He accepted for the time quoted by the management. Now the point is management has to deliver in 7 days. Now management will request the workers to work for overtime. Then who should bear that overtime premium? Management. Okay. So that we are transferring it to P&L account. Next, due to seasonal demand. When it is due to seasonal demand, see no one's mistake is there. Management failure is not there. Even the workers are working for overtime because of the seasonal demand. The product has a seasonal demand. Cool drink bottles. Summer is the season. Winter the demand will be less. So what I mean to say, in this case, that overtime premium has to collect from customers only. Has to collect it from the buyers or customers. So that we are treating it as the factory overhead. By treating it as factory overhead, it will cancel for the stock valuation. By canceling for stock valuation, we will collect it from the customers. So treat it as factory overheads. This is the accounting treatment of the overtime premium. Please understand, I am consolidating. When it comes to overtime, it's all about overtime premium accounting. Overtime is simple, working beyond normal working hours. When it comes to overtime premium accounting, depends upon the reason. First, you need to check for the reason. Due to what reason they are working for the overtime? Is it because of the client request, or is it because of the management failure, abnormal loss, or is it a regular feature, or is it a due to seasonal demand? If it is due to seasonal demand, factory overhead, abnormal reason, P&L, at the request of customer, added to respect to job, regular feature, revise the labor hour rate. Clear? Now, let us do one question based on that. Illustration 3. In a factory, the basic wage rate is 100 rupees per hour and overtime rates are as follows. Before and after normal working hours, 175% of basic wage rate, Sundays and holidays, 225% of basic wage rate. Now, normal hours is 1000. Actually, what happened? There is a printing mistake. It should be ulta. First, we have to read this. During the previous year, the following hours were worked. During the previous year, in the year following hours were worked. Normal time they worked for 1 lakh. Overtime before and after working hours to 20,000. Overtime on Sundays and holidays 5,000. Just now I told you before and after means 10 a.m. to 6 p.m. Before 10 a.m. after 6 p.m. Sundays and holidays 5,000 hours. I understand totally how many hours they are working. 1,25,000 hours. 1,25,000 hours they are working. In that 1,25,000 hours, the following hours has been worked in job Z. On job Z, what is the hours worked means normal 1000. Overtime before and after working is 100. Sundays and holidays 25. This is for the job Z. This is for the company. Company fully working for 1,25,000 hours. Out of 1,25,000 hours, they are working on job Z is 1,125 hours. I understand. Let's look at the requirement. You are required to calculate labor cost chargeable to job Z. They are asking labor cost chargeable to job Z and overhead in each of the following instances. Look at the first one, where overtime is worked regularly. When the overhead is working regularly, revise the labor hour rate. How to revise the labor hour rate? Listen. In the previous year, they are working for 1,20,500. What we'll do? We'll multiply with the hourly rate. What is the basic wage rate? 100, which is called a normal time hourly rate. Before and after normal working hours, 175% of basic wage rate. 175% of 100 is 175. Sundays and holidays, 225% of basic wage rate, 225. What I'll do? 100, 1 lakh into 100, 20,000 into 175, 50,000 into 225. You'll get the amounts. Make the total. You'll get the total wages divided by total wages divided by total hours. How many hours? 1 lakh 25,000 hours. Okay, let me calculate the total cost. This is 1 crore. This is 1 crore. This is 35 lakhs. This is 11 lakh 25,000. Correct? 5,000 into 225 equal to 11 lakh 25,000. So total comes to 1 crore, 1 crore plus 35 lakh, 1 crore 35 lakhs, 1 crore 46 lakh 25,000, 1 crore 46 lakh 25,000 divided by 1 lakh 25,000. 1 crore 46 lakh 25,000 divided by 1 lakh 45,000. Sorry, 1 crore 46 lakh 50,000. Correct? 1 crore 46 lakh 25,000. 1 crore 46 lakh 25,000 divided by 1 lakh 25,000 equal to 117. So hourly rate is revised hourly rate is 117. How much is charged to job Z? That is what the question. How much is charged to job Z means on job Z they are working for 1,125 hours into 117. 1,125 into 117. 1,125 into 117. How much it comes to? 1,31,625. So 1,31,625 is the answer. Okay, next. Where overtime is worked irregularly to meet the requirement of production. Irregularly. That's what I should do. Demand. Exigencies and urgencies. Seasonal demand. Irregularly they are working with due to seasonal demand they are going to work irregularly. In that case, that premium will be added to the factory overheads. So how much is the labor cost? Labor cost equal to 100 rupees per hour. Labor cost equal to 100 rupees per hour. How much will charge to job jet? Job jet equal to 1,125. 1,125 hours. Correct? 1,125 hours into 100, which equals to 1,12,500. We are going to add 1,12,500 to the job jet. How much is charged to factory overhead? Factory overhead equal to here 100 hours. 100 hours is the working beyond before and after working hours. So this 100 hours will be multiplied with what rate? Premium. See, total is 175. Total is 175. It includes two things. Normal hourly rate of 100 rupees, premium of 75 rupees. So here we need to take only 75. Please understand, entire 1,125 rupees already paid at the rate of 100 rupees. Now I am accounting only premium. How much is the premium? 75. Here how much is the premium? 125. So 100 into 75, 7,500. 125 into 25. 125 into 25. 3,125. 3,125. Total comes to 10,625. This will be added to factory overheads. 10,625 will be added to factory overheads. Are you understanding? All of you, simple. Overtime premium. Overtime premium. How we are going to account? If it is a irregular demand, then we'll charge it to the factory overheads. I'm charging it to the factory overheads. Next, where overtime is worked at the request of the customer. When it is at the request of customer, this 1,125 will be added to job jet only. 1,12,500 added already. Now 10,625 also will be added. Total comes to 1,31,625 charged to job jet. Clear? Understanding? So this is about the overtime. Okay, now I have to discuss with you labor turnover ratios. Not that important from the examination point of view, but application of labor turnover ratio might given. They might give you the question based on the application of the labor turnover ratios. See, there are three ratios. Separation ratio. Okay, I'll show you the formulas here. Why to waste the time? Look at this. Labor turnover methods. or labor turnover ratios. First one, replacement method. Number of employees replaced during the year divided by average number of employees during the period. So number, see, replacement. First you need to understand replacement. Existing employee has been resigned, vacancy created, such vacancy has been filled. That is called as the replacement. Replacement does not include new joinings. Very important. Replacement does not include new joinings. Are you understanding? Okay, look at here. Note, new employees appointed on account of expansion plan of the organization are not included in the number of replacements. Replacement is filling up the vacancies. New joinings does not include in that. Number of replacement divided by average number of employees. How to calculate average number of employees? Employees at beginning plus employees at ending divided by 2. Separation method. Nothing but separation means what? The people who left the organization. When I say separation, it can be for any reason. It can be because of the voluntary resignation, or it can be because of voluntary retirement, or because of the discarding from the company, or shifting to some other company. It can be for any reason: death, accident, disability. For any reason, if the employee left the organization, we are going to take it as the separation. Number of separations divided by average number of employees. Number of separations divided by average number of employees will get separation method ratio. Okay, next, flux method. When it comes to flux method, it is the overall ratio. We are going to take the separation as well as replacement. When it comes to flux method, we are going to take the separation as well as replacement. Number of separations plus number of replacement divided by average number of employees. When there is a new joining, sometimes we take that also. Number of separations plus number of replacement plus number of new joinings divided by average number of employees. This number of replacement plus number of new joinings together is called as the number of accessions. Number of accessions means replacement plus new joinings. Look at the three formulas. Here, number of separations, number of replacement divided by average number of employees. Number of separations, replacement, new joinings, average number of employees. Number of separations, number of accessions divided by average number of employees. Okay, now average number of employees at beginning plus employees at ending divided by 2. Next, employee turnover ratio. Employee turnover rate for the period divided by number of days in a period. Into 100 will not be there. Okay, so please understand. This is how we need to calculate. Application is not required that much. Okay, but let us calculate one application oriented question. Here, before going to that, due to sometimes they'll ask you to calculate labor cost due to labor turnover or loss making by, see, whenever there is a labor, what do you mean by labor turnover? People coming in, going out, joining into the company, resigning from the company. Resigning also involves the cost, joining also involves the cost to the company. When they're joining, company has to conduct the interviews. Company has to pay the joining bonus. When they joined into the company, first of all, the company has to train them. During the training period, the production will be less. Are you understanding? During the training period, production will be less. Due to the production less, it is going to have impact on the sales. It is going to have the impact on the sales. It will take 3 months time. It will take normally it will take 3 months time for the new employee to adjust with the environment. During that 3 months time, the production will be less. By losing the production, we are going to lose the sales. Answer sales, we are losing the contribution. Let me take an example. The vacancy created on 21st December 2024, but the filling happened on the 31st Jan. During these many days, there is no production. That is also one of the loss. Existing employee has been resigned on today. But joined on 31st Jan. Replacement happened on the 31st Jan. In this time, there is no production. That is also the loss because of the labor turnover. Are you understand? Apart from that, as I told you, joining bonus, training period, they need to pay some conveyance has to be given. All these things is called the labor turnover cost. When they're resigning from the company, settlement cost will be there. All of you clear? Okay. So let us do the question based on the application oriented. Look at this. The management of BR Limited worried about their increasing employee turnover in the factory, and before analyzing the causes and taking remedial steps, it want to have an idea of the profit foregone. They are asked to calculate profit foregone as a result of the labor turnover. See, there is a huge labor turnover in the company. Now management is thinking to take the corrective actions. But before taking corrective action, they want to know how much is the profit lost because of the labor turnover. So details given. Last year sales 83 lakh 3,300. PV ratio 20%. The total number of actual hours worked by the direct employee force was 4 lakh 45,000 4 lakh 45,000 hours. Total sales made in the last year is 83 lakh 3,300. PV ratio is 20%. Total hours worked is 4 lakh 45,000 hours. Now, the actual direct employee hours included 30,000 hours attributable to training new recruits. This 4 lakh 45,000 includes 30,000. This 4 lakh 45,000 includes 30,000 hours. 30,000 hours which belongs to new recruit, training new recruits hours. Now, out of which half of the hours were unproductive. So out of 30,000, half of the time is unproductive, half is 50%. 15,000 hours are unproductive. 15,000 hours are unproductive. So what is the effective productive hours? What is the effective productive hours means? 4 lakh 45,000 includes 15,000 unproductive hours. If you exclude that, 4 lakh 30,000 is the productive time. Are you understanding? Next, as a result of the delay, this is as a result of the delay in filling the vacancy. As a result of delay by the personnel department in filling the vacancy due to employee turnover, 1 lakh potential productive hours has been lost. What are the total productive hours lost means? 1 lakh due to delay filling, 15,000 due to training period people. 1 lakh 15,000 is the loss. 1 lakh 15,000 is the total productive hours lost. Total productive hours lost. In 4 lakh 30,000, what the sales they achieved? 83 lakh 3,300. Now, here what we need to calculate? Using this information, what we need to calculate is contribution lost. How to calculate that? Listen. In 4 lakh 30,000 hours, they are achieving the sales of 83 lakh 3,300. Okay, the hours lost is 1 lakh 15,000. 1 lakh because of the delay, 15,000 because of the training period employees. So we'll calculate the sales lost. I understand how much is the sales lost? 83 lakh 3,300. 83 lakh 3,300. 3,300 divided by 4 lakh 30,000 into 1 lakh 15,000 equal to 22 lakh 20,650. So 22 lakh 20,650 is the sales lost. So what is the loss means? Contribution loss. Entire sales is not the loss. Contribution lost is the loss. How much is the, how to calculate contribution? Sales into PVR. Sales into PVR will get the contribution. So 2 lakh 22,000 into 20% is the PV ratio. How much? 4 lakh 44,130. 4 lakh 44,130 is the contribution lost because of the labor turnover. Are you understanding? Next. Okay. The cost incurred consequent to employee turnover revealed on the analysis the following. Apart from contribution loss, they're incurring settlement cost, recruitment cost, selection cost, training cost. Make the total. We'll get the total cost because of the labor turnover. Contribution loss and add all the given cost elements. We'll get the contribution loss. Sorry, we'll get the total cost because of the labor turnover. Are you understanding? Now, assuming that potential production loss as a consequence of employee turnover could have been sold as a prevailing prices, find the profit foregone last year on account of employee turnover. How much is the profit foregone means? Sum of these factors. Sum of these values is the profit foregone. Are you understanding? Okay. So this is what. So the last concept what we need to discuss in this is that employee cost calculation. We need to understand employee cost calculation. What is this employee cost calculation means? Listen, see, here you need to understand three factors. One is CTC. One more thing is total earnings or gross earnings. Last one, net earnings or take home. So you need to understand these three factors. CTC. What is CTC? Cost to company. Total earnings or gross earnings. Net earnings. Okay. Now what will happen? Generally, let me show the picture. How? See, every month the company is going to generate the pay slip. Every month the company is going to generate the pay slip. In pay slip, what they'll do? They'll be having two columns or two sides. On the first side, they'll be having total earnings made by the employee. Total earnings, which include basic wages, DNS allowances, HRA, travel allowances, leave travel allowances, everything will be there. Those are all the earnings, which comes under total earnings. From the total earnings, we have to reduce the statutory deductions, TDS, PF, ESI, PT. After reducing that, we'll get the net earnings. Okay, let me explain that. Look at here. Here it is. This is the wage slip. This is the wage slip. If you look at here, income. First, look at the income side. Basic wages, bonus, incentives, allowances, leave, allowance, all the allowances, and then payment under welfare scheme. All these things is considered as the total earnings. If you make a total of income side, this is called a total earnings. This is the total earnings. From the total earnings, we have to reduce. We have to see deductions. What are the deductions? Statutory deductions: PF, ESI, PT, TDS. Apart from that, any other deductions, voluntary contributions or contribution to benevolent fund, we'll reduce all those things. If you reduce all those things, if you reduce this, see, these are the total earnings. Let me take an example. 1,20,000 is the total earnings. 20,000 comes as the deductions. The net amount paid is 1 lakh. This is called as the take home. Are you understanding? So 1,20,000 in our example, 1,20,000 is the gross earnings, total earnings. If you exclude the deductions, we'll get the net earnings. Are understanding? Now, to this, see here, one more thing what you need to understand is PF and ESI. How it will happen? PF means employee will contribute some amount, equal amount will contribute by the employer. Equal amount will contribute by the employer. Make the total. 2,000 contributed by employee. 2,000 will contribute by employer. Totally 4,000. 4,000 will be paid to the PF department. Will be deposited in the scheduled bank account. Same way ESA also. ESA also employee will contribute, employer will contribute. Together will pay to the department. Now the point is why I am explaining this is here what we taken is we are deducting from the earnings of the worker. Firstly we taken 1,20,000. From 1,20,000 that is the money belongs to the worker. Now we are telling the worker, sir, from your money we are deducting 2,000 rupees towards PF. That is called employee contribution. Let me take an example. I am working in the company called the Infosys. Infosys is paying me 1,20,000. But Infosys is asking me, sir, pay 2,000 rupees for the PF. I said, like, deduct from my salary. My salary is 1,20,000, you deduct 2,000. That means my contribution is 2,000. Now, Narayan Murthy will contribute how much? 2,000. Total 4,000 will be deposited to scheduled bank account. Are you understanding? Now, why I am explaining this point is to understand the CTC. To understand the CTC. See, apart from 1,20,000, Narayan Murthy is contributing 2,000 towards PF and 1,000 rupees towards ESI. Let me take an example. Just example. This is the PF and ESI. So on me, how much he is spending me? Totally 1,23,000. 1,20,000 my gross earnings and contribution from the employer. Contribution from the employer is 3,000. Cost to company. How much is the cost to company? Means 1,20,000 paid for me and 3,000 rupees paid to the PF and ESI. What is the cost to the company? 1,20,000 for me, 3,000 to the PF and ESI, total 1,23,000. So simply I can tell you, to the total earnings add employer contribution to PF and ESI. Are you understanding? If you add this, we'll get the CTC. Simple. Total earnings minus deductions. We'll get net earnings. Total earnings plus employer contribution to PF and ESI. We'll get CTC. Why I'm explaining in detail means sometimes they'll ask you to calculate labor cost. Sometimes they'll ask to calculate total earnings. Labor cost means labor cost to the company. Labor cost means what? Cost to what? Cost to company. So you have to calculate CTC. If they ask to calculate labor cost, calculate CTC. If they ask to calculate worker earnings, then calculate total earnings. Don't consider employer contribution, PF and ESI. Take total earnings. You know na? Additional column. I told you right, basic wages, allowances, incentives. Take the total of that. We'll get total earnings. If they ask you to calculate net earnings, then total earnings minus deductions, net earnings. It depends what they're asking in the question. Are they asking labor cost? Are they asking total earnings? Are they asking net earnings? Are you understanding? Now look at the question based on this. Question number 5. Calculate earnings. They are asking earnings. Calculate earnings of A and B. So total earnings they are asking. Okay, from the following particulars for the month and allocate employee cost to job XYZ. They are asking total earnings of AB from the following particulars for the month and allocate employee cost. Listen the wording. Look at the wording. Look at the wording. Here they said earnings. Here they said employee cost means CTC. CTC to be apportioned to job X, job Y, job Z. So there are two requirements in the question. Number one, calculation of earnings. Number two, calculation of CTC. Number three, allocate into job XYZ. Three requirements. Are you understanding? So what we'll do? First we'll take basic wages, 10,000, 6,000. DNS allowances, 50%, 50%. That will apply on it. Basic wages, DNS allowances will be applied on the basic wages. Are you understanding? Next, contribution to PF, 8%, 8%. On basic wages. Contribution to ESI, 2%, 2%. Anyhow, they're not asking net earnings. They're not asking net earnings. Okay, next. The normal working hours for the month are 200. Overtime is paid at the double the total of normal wages and DNS allowances. Listen, listen, listen. Normal working time is 200 hours. If the employee is working for overtime, then you will expect what rate? Double rate. Double rate of the normal earnings and DNS allowances. Nothing but basic wages plus DNS allowances on this double rate. Okay, now employer's contribution. Listen, listen. This is about employer contribution. Employer contribution to state insurance and provident fund are equal rates with employee contributions. Whatever contributed by employee, the same amount will contribute by employer. That means employer also contribute 8%, 2%. PF 8%, ESI 2%. Okay, now the two workers were employed in job XYZ in the following proportions. When it comes to worker A, working 40% of the time for X, 30% of the time for Y, 30% of the time for Z. When it comes to B, 50% for X, 20% for Y, 30% for Z. Overtime was done only on job Y. Overtime was done only on job Y. Are you understanding? That means overtime wages should be allocated to job by only. Overtime wages should be allocated to job by only. Who is working for overtime? Look at here. Overtime is working only by worker A. Overtime is working only by worker A. That overtime wages should be considered only for job by. Now let us do one by one. Let us do one by one. First, earnings. How to calculate earnings? A, B. Basic wages made 10,000, 16,000. DNS allowances 50%, that is 5,000. Here it is 50%, that is 8,000. Now overtime wages earned by A. How much? How many hours is working? 10 hours. Now we need to calculate hourly rate. How to calculate hourly rate? Look at here. They clearly mention double the basic wages and DNS allowances. Basic wages is 10,000. DNS allowances is 5,000. Working for 200 hours. So which equals to 15,000 divided by 200 hours, which equals to 75 rupees per hour. Double the rate, which equals to 150. Are you understanding? 150 into how many hours is working for overtime? 10 hours. 150 into 10, 1,500 is the overtime wages. Clear? So the total earnings of A is 16,500. Total earnings of B is 24,000. So this is the first one answer. This is the total earnings. Are you understanding? Okay, this is the total earnings. Now what we need to do? We need to calculate CTC. How to calculate CTC? To the total earnings. To the total earnings add. To the total earnings add employer contribution to PF and ESI. What is the total earnings of A, B? Total earnings of A is 16,500. B is 24,000. Add PF, add ESI. How much is the PF? 8% of basic wages. Basic wages of A, 10,000. 10,000 into 8%. 10,000 into 8%. 800. Okay. 16,000 into 8%. The next one. 16,000 into 8%. 1,240. Yeah. Next 2%. 200. Here 320. So 1,280. 1,280. 320. Total comes to 25,600. Here total comes to 17,500. This is the CTC. CTC is 17,500, 25,600. CTC is 17,500, 25,600. This is the second one answer. Now we need to allocate. How to allocate? Listen, what we need to allocate? Cost. How much is the cost? 17,500. A. Cost is 17,500. B. Cost is 25,600. Please understand this include two things. Wages, overtime wages. The overtime wages is 1,500. It should be given to only Y. This the wages is 16,000. This should be given to X, Y, Z. We know the proportion. What is the proportion? 40, 30, 30. So 4 is to 3 is to 3. When it comes to here, total amount will be apportioned to X, Y, Z. There is no overtime. X, Y, Z. In what proportion? 5 is to 2 is to 3. 5 is to 2 is to 3. In that proportion, we will apportion. and then we'll add. Are you understanding, all of you? This is about the labor costing. So mainly we need to focus only four areas. Number one, basis to make the payment. Number two, idle time, overtime. Number three, overtime, sorry, labor turnover ratios. Number four, value employee cost calculation. CTC, total earnings, net earnings. Total earnings minus deductions is net earnings. Total earnings plus PF and ESI plus employer contribution PF and ESI will get the CTC. Clear? Okay.